A very good afternoon, everyone. Once again, those present virtually as well, we have our first session speaker, MR Venkatesh sir. Welcome to you. We will be starting the session in a few moments. Nitin, can we have Mr. MR Venkatesh pinned, please?
Should I start now or wait?
Welcome to Dr. MR Venkatesh. Hello.
Yeah, I'm able to hear you.
Yeah, warm welcome to you, sir.
Thank you. Thank you.
The meeting will start in a short while, sir. Meanwhile, a warm welcome to you, sir.
Thank you very much. Thank you very much.
Good evening. A warm welcome to all the members of FKCCI to the analysis of Union Budget 22-23. May I request our President, Dr. A.S. Prasad, to escort the guests, and I also request our office bearers to come on the stage, please, and including our Chairman, Mr. Shravan Guttu, Central Tax Corporate Laws. Thank you. Thank you, sir. Once again, a warm welcome, and I welcome all our distinguished guests, both online and offline. A warm welcome to you, sir. May I request our President, Dr. I.S. Prasad, to make his presidential remarks. Good evening. My colleague, Senior Vice President Sri B. Gopal Reddy, the Vice President Ramesh Chandra Lahoti, the Secretary General, the today's guest speakers, virtually my good friend, Dr. M.R. Venkatesh, practicing advocate, he's joining virtual from Delhi. Sri P. Srinivas, the corporate advisor, Kamal Bali, President Managing Director, going to join virtual for panel discussion. The Sri Jain Chatterjee, Head of Tax, ABB India, again just joining 15 minutes. We have with us Sri Deepak Kumar Jain, the founder, Aklat Advisors, who has also been joined organizing this program along with FKCCI. Our past president D. Muralidhar, Director SNAM, past president is also panelist. Shravan Gadutu, the young Chairman, Central Tax, Corporate Laws, ADI Committee, the past president, Managing Committee members, press, electronic media, distinguished invitees, and all the participants been logging through virtual. A warm welcome to all of you for this memorable event to discuss the deliberate over the Union Budget presented by Honorable Union Finance Minister, Srimati Nirmala Sitharaman. Today I am reminded of a famous saying by the President of the United States of America, Mr. Joe Biden, who once said, "Show me your budget, I'll tell you what you value." The Union Budget then shows its values, namely fiscal prudence in the face of great adversity by keeping the fiscal deficit of 6.9% of this year. Again, it's a concern for all of us. The Union Finance Minister, while presenting this budget, has brought very important focus on what is need of for India, the 7 engines, PM Gati Shakti, which is the need of our, I think, the right time, the right decision of infrastructure across all India. The Finance Minister also been announced the river project connectivity from Godavari, Ganga to Kaveri. Again, the Prime Minister been focus about doubles the farmers' income of minimum support price of 2 lakh crores, and again make the most important last 73 years what not been achieved to have established the railways connectivity, 400 railways at one station, one product, which give impetus for the agriculture economy. The next important what we've been really very happy to passionate to know about the intent of Honorable Finance Minister through Prime Minister of India, when we at FKCCI has brought before us the survival of MSME, the revival of MSME, as we all always know that in COVID pandemic, how this industry been suffered on account of the funding, they lost the values, they lost the orders, and again the migration of workers. We represented before the Finance Minister, last 170 years, the industry has been contributed for the exchequer. At least for this year, let the government talks about, the government comes forward, to the government handle the MSME. We ask for the interest-free loans, soft loans, but I'm very happy the Finance Minister has been addressed this concern by bringing the 50,000 crores additional export trade guarantee for the support of the affected industries. The most important, again, another future is through the trust, credit guarantee trust, infusion of funds, which is going to help 2 lakh crores for MSME. I'm very happy as the President of FKCCI that this direction of the budget, what it speaks of 2,50,000 crores for the MSME is going to help, is going to be enhanced and revive. And most important, all of you know that the present day, everybody been asking for the early recovery of funds from the supply of public and private enterprises, where they have to go to hell and they have to wait for 5 months, 6 months to recovery. I think the Finance Ministry been addressed in this budget to e-bill, like clearance of e-bill, 75% of the amount. That's again positive note. while we have got eminent speakers to talk about dissect about the budget of industry impact, I'd also like that because of the nation, because of the Honorable Prime Minister, which has been taken a decision abrupt and also the wise decision of allowing the Indian companies to produce vaccination. Today, each one of us been standing here with health because 100 crores vaccination for 132 crores population is the right direction because the government intend to save the humans against the employment. Here, the Honorable Finance Minister has been touched about the 7.5 lakhs crores, which again the capital outlay, which is going to help the revive the economy and financing investment in the capital investments. And again, she has been talked about digital university. These are the very positive. Any industry needs three important reforms. One is the land, the power, and again labor. Government has been touched again labor reforms, which is going to be implemented. The land reforms, all of you know that the government at central and all the states been relaxed that the industry can purchase the agricultural lands, ease of doing business. I'm very happy that the finance minister not thinking of each one individual like we get deduction 50,000, 1 lakh, leave apart that. What is 39 lakhs crores is going to come, that she used the Bhagavad Gita phrase, Lakshemam and Dharmam. That means every rupee you collect from the society has to go back to the society. In apt in Kannada, Kere Neeru Kere Selbeku anta. As FKCCI, as the Federation of Karnataka Chamber of Commerce, on behalf of all the 30 district chambers of commerce and all the 155 associations, wholeheartedly welcome this budget and waiting for the implementation of this budget for economy revival and the growth of rural economy. And again, it's going to be the allowing the power to choose from the power distribution companies much more. And I'm very happy to inform you that Finance Minister, when they made a request, she has been agreed to address all the members industries on 9th February, that is Wednesday around 4 o'clock. We'll communicate to you and each one of you can come here. She's going to address virtually by 30 minutes about his reactions and his intent, her intent to what is being stored for the industry and another 10-15 questions from the industry sectors. I request each one of you to make use of the program. And finally, I would like to extend the warm welcome to all my resource persons, the guest speakers, the Deepak Kumar Jain, the founder of Clocks, Dr. M.R. Venkatesh. I'm waiting for his statement because I'm follower and watching all the public channels about his opinion. My good friend and the great leader and the great knowledge and expert, P.V. Srinivasan, corporate advisor, and the other panelist is going to join virtual. Kamal Bali, the President Managing Director, Volvo Group, the Jain Chatterjee, Head of Tax, ABB Limited, and our D. Muralidhar, Director, SNAP, and past President, FKCCI. I'm sure the deliberation of the resource person, the speakers, the eminent speakers with their authority, with their experience will certainly enlighten the impact, the intent of the government and the positiveness of the government, of this government, making India a new India in the 75th year of independence of Azad Ki Amrut Mahotsav. With this, I extend warm welcome to all my past questions and all the participants, both physical and virtual. Thank you.
Thank you, sir, for my presidential remarks. May I request our President, Dr. I.S. Prasad, to welcome our honored guests, Sri P.V. Srinivasan and CA Deepak Kumar with a bouquet. I request our Chairman, Shravan Gututu, Chairman, Central Tax Corporate also, to hand over the bouquet. Thank you, sir. Now, may I request Dr. M.R. Venkatesh, our honored practicing advocate, New Delhi, to give his address. Oh, I'm sorry, sir. May I request Shravan Gutur, Chairman, Central Tax Corporate Laws, to introduce and give his remarks for the guest.
A very good afternoon to one and all present here with us physically in this auditorium, Sir MV Auditorium, and 150 plus participants who have joined us virtually as well. Thanks a lot for being a part of this session. And thanks to our president for a very informative initial remarks. I must congratulate him for doing such a wonderful job, be it from the pre-budget memorandum to the various other initiatives that the president and the office bearers are taking as something noteworthy. So talking about today's session, friends, we all know that in the past couple of years, after the pandemic has kind of jolted the economy, the government has always been on a tightrope walk. On one hand, they have to focus on boosting the expenditure, specifically the capital expenditure. They have to give various kinds of incentives to various sectors of the economy, MSME or otherwise. And on the other hand, there is a pressure of the mounting fiscal deficit, which is way higher than the pre-pandemic levels. So this situation has, in fact, resulted the government in the past couple of budget sessions to be very cautious about what they offer through the budget. In fact, if you see the day before yesterday's speech of the Honorable Finance Minister, she brought out a host of new age initiatives, be it in relation to the new and clean energy, be it in relation to developing the digital banking and the digital payments platform, etc. So, but this budget has thrown open a host of questions. Questions could be in relation to, is this budget capable of meeting the near-term initiatives? Is this budget capable of meeting the long-term goals? Friends, I welcome Mr. Jain Chatterjee from ABB Limited to our session on Union Budget Analysis. Can I request the President to kindly welcome the speaker with a bouquet? Friends, the budget has opened a Pandora box kind of questions. It could be in relation to whether we have a proper road paved up in order to achieve the 8 to 8.5% growth estimates that we have. Is there anything to do to better the inequality that is already there? Is there anything which will result in better employment opportunities? All in all, we can say, has this, Modi-nomics has really done anything to offer us more Achedin? In fact, all these questions and more questions will be answered by all of our speakers here today. Without further ado, let me take this opportunity to introduce the very first speaker we have, who is joining us virtually from Delhi, Dr. M.R. Venkatesh. Briefly speaking about him and his accolades that he has behind him. He is an advocate by profession. He's a chartered accountant as well. He has been awarded the PhD for his thesis on evaluating the impact of minimum support price and input subsidies in the farm sector in 4 southern states of India. He's in fact an acknowledged expert in the field of anti-money laundering laws, anti-black money laws, direct taxes and related regulations. He's a designated partner in Agastya Legal LLP, and he's heading the advisory and litigation practice related to the above fields. He is, of course, as our president also mentioned, he is a regular panelist in several prime time shows on national television, and he is a well-organized columnist in leading media publications in India. With this introduction, I welcome Sir M.R. Venkatesh to this gathering. Let me also take a moment to introduce the session speakers for the first half of the Union Budget Analysis. Today we have with us CA P.V. Srinivasan. He's a chartered accountant. He's a member of the Institute of Chartered Accountants of India from more than 2 decades, and he's a corporate advisor on global tax and corporate laws. He has served 18 years as the head of corporate tax in Wipro Limited. He brings with him over 33 years of hands-on experience in industry with regard to corporate tax compliances across tax jurisdictions, including the US, Europe, and the Asia Pacific. He is advising promoter groups on holding structure periodically aligned to the changes in objectives and laws. He has participated as a member of Emerging Issues Task Force on non-resident taxation that is formed by the Ministry of Finance, Government of India. With this introduction, I welcome P.V. Srinivasan sir to the gathering. And then, of course, our ever friendly, ever helpful Deepak Kumar Jain, who has joined hands with us through his entity Accolade Advisors, IndiaGST.com. Deepak Kumar Jain is a fellow member of the ICAI as well. He carries with him 21 years of experience on indirect taxes, including 9 years out of it in the Big Four. He's the founder of Accolade Advisors, as I already mentioned, and he's providing a lot of advisory and compliance litigation support services to a lot of multinational as well as Indian companies. He has authored a book on anti-dumping, anti-subsidy and safeguard measures. He's also a part of several initiatives that are taken up by BCIC, KSCAA, and our very own FKCCI. With this introduction, I present Deepak Kumar Jain to you all. Over to the Secretary General, please.
Thank you, Mr. Shravan Guttur, our Chairman, Central Tax Corporate Law, for his introduction of the guest. May I request our distinguished speaker, Dr. Mr. Venkatesh, to give his talk on economic impact of the budget. Over to you, sir.
Mr. I.S. Prasad, my fellow panelists, people who are hearing to this lecture from the FICCI auditorium in Bangalore and all over across Bangalore probably, my namaskarams to you and a warm good evening. Now, look at the way Corona has impacted. I can sit in Delhi, I can do this lecture, immediately go to Chennai, have another lecture, and then go to Dubai and give another lecture. This is the schedule for my evening, which would not have been possible thanks to Corona. But for Corona, I would have still gone to Bangalore and done this lecture and come back, taking the evening flight. So in a way, Corona has digitized our life like never before. And I think it is a good augury. It's a good fallout of Corona. And now coming to the subject proper, I think I.S. Prasad reminded us of the shloka from chapter 11 of Bhagavad Gita, not from Bhagavad Gita, Mahabharata, which the Honorable Finance Minister did quote. One thing when she said about the taxpayers, and she was quoting from Bhishmacharya, who was lying in a bed of arrows. I think the taxpayers are also like a Bhishmacharya lying in a bed of arrows. So the analogy couldn't have been, this is on the lighter side, but the analogy couldn't have been more starker. That's the point I wanted to make. Now coming to the budget proper, I think this budget, probably I've been watching budgets for the last 20 years. I think for the first time, for a good part, the budget was like a finance minister of a country rather than of a panchayat. Usually the finance ministers tend to be more populist and try to say, I have allocated something here or I have allocated something there, and have virtually not looked beyond, say, the monsoon of that year. For that was their vision. But this time, I see the finance minister not only drawing a budget for this year, but also drawing a vision for the next 25 years, which will coincide with our 100th year of independence. I think for that, I would straight away think that the personality of the Honorable Prime Minister came into play. The way I see Modinomics panning out in the last couple of years and probably in the next few years of his remainder of his term, and probably also if everything goes well, continues also. I see Mr. Modi becoming Franklin Roosevelt of this country. Franklin Roosevelt took, as you all know, became the president of America when it was wartime and Great Depression. So he had a simple formula that was relief to the poor, reforms of the financial sector, and recovery of the economy, the 3 R's. And if you look at what Modinomics is all about, it more or less circulates among the 3 points. On relief to the poor, there is no let out or let down. It has been consistent, hard, and it has been a constant. reforms of the financial sector, when he took over, the public sector banks were prime candidates for NCLT. That was the level to which the public sector banks were functioning. And he has more or less seen to that the public sector banks have, if not come to the pink of health, at least they are now in a position of some strength. In fact, this year, the allocation for the public sector banks is a mere 20,000 crores for capitalization. The third thing that he has talked about is the recovery of the budget, or of the economy rather, is through infrastructure. The finance minister or the prime minister don't want to have multi-engine or multi-level engines of growth. They simply want to focus on infrastructure, and if everything else will be benefited by this infrastructure, so be it. If somebody is not able to benefit, so be it. We are anyhow putting a safety valve through various welfare measures, and this is the broad thinking. The broad thinking is very clear. I have reformed the banks. I have done enough for the financial sector. I require money for my welfare programs. I will have to collect it, so I will have no let up on the taxation collection. I will go hard and I will collect my taxes, and I will also spend my money on infrastructure. So this is the triumvirate that I see as what Roosevelt did in the 30s and the 40s for the US is being replicated in India in 2020. Whether this is the correct formula or not, that is for the politicians to decide. It's for a political theater to decide. But as far as an economist is concerned, I would say that these are the three pillars on which the finance minister has fixated her budget. Having said that, old habits die hard. On one hand, we talk about digital economy, we talk about digital currency, we talk about cryptocurrency, we talk about blockchain technology. Virtually, we want to run GST through technology without human interference at all. The way GST is going, it is not, we thought it was a goods and service tax. I think it is a technology-driven enactment. It is more or less now coming that you have very little of interface, and all that you have to do is to pray all the gods that you know to see that you get your input credit, and so that you can move forward. Now, that is the level. But having talked about such fantastic level, suddenly the prime minister, the finance minister comes to this level to say that she will increase custom duty on umbrella by 20% to 20%. Now, I don't know what is this umbrella got to do with reviving the economy by increasing the custom duty by 20%. Having said that, I was sitting in the channel, not in the channel, I was of course sitting in the channel, but in my same place here. One of my friends called and told me, don't you know, Mr. Venkatesh, you are critical about this. This is supposed to be an answer to Chinese imports. I said, how is it? Now I'll give you these numbers. We imported $97 billion worth of materials from China last year. I exported $27 billion, 25, 26. We run a trade deficit of around $70 billion. Now, $70 billion of imports from China is not, most of it is not high-tech engineering. Most of it is not that we can't produce. A good portion of this can be produced in this country, which includes holy powder, which includes your Ganpati for Vinayak Chaturthi, which includes calculators, computers, computer parts, electronics, lights, bulbs, fans. Most of it, which was manufactured by our MSMEs, is being manufactured in China more competitively, exported from China to India, and despite paying the customs duty, it is still profitable for the Chinese to bring that goods to India. Of course, I saw the biodata of one of my co-panelists who is a specialist in anti-dumping safeguards and countervailing duties. I would believe that the government wants to do something, but is unable to do anything. And this is where is our weakest spot, which has probably not been addressed with the budget. What is the weakest spot? Go back to 2012. The then Prime Minister, Honorable Manmohan Singh, pointed out a serious lacuna in the economy. And he said, look, we are fixated to a 15% share of industry, manufacturing to the GDP, not industry, manufacturing. And he said by 22, that is 10 years later, which is now, we must increase by 1 percentage point every year and go to 25 percentage point as in manufacturing share of the GDP by 22. And what is the share of manufacturing today? It is a stubborn 15%. Of course, the economic survey points out that we have increased our manufacturing by 11%. The growth of manufacturing last year in 21-22 is estimated to be 11%. But that comes from a very low base, and 11%, unless it goes up for next 3-4 years consistently, I will not look at it in any sense of jubilation. But it is good augury. Having said that, this is a weakest spot in our development story. Unfortunately, we have not addressed it. So look at the cascading impact. Once your manufacturing is not robust and you are not able to produce small items in India, which we are eminently capable, our employment is not generated, because manufacturing is the biggest employment generator. Manufacturing develops your economy big time, and it is a test of all your education, social welfare programs, your skill development, all these things which we have been consistently talking about, lamenting, breastbeating. But the proof of the pudding finally will be in its eating when manufacturing grows to about 25%. All East Asian chains, Thailand, Korea, Japan, China, have something more than 25 to 33% as their share from manufacturing alone. And we are the only country which aspires to have a very large share in the GDP or in the global GDP without actually increasing our manufacturing. So this is probably not attended to by the budget. But having said that, the finance minister believes that, look, I can lay the infrastructure, I can do what I have to do. I will, as probably Gst Prasad mentioned, that I will give something like your credit guarantee schemes. I will enhance the credit guarantee schemes for MSMEs. And this is what I can do. I can't do much. This is one aspect. The second aspect, if you look at it, we have put in very serious amount of money on rural infrastructure as welfare programs and other things. I'm sure, as Prasad mentioned, the finance minister is going to address you a couple of days from now. I would only wish somebody puts into the finance minister a simple proposition that any plan, any program which is brought in by the government must be set for a review with, say, 5 years down the line. Any program, any regulation which is brought in as some sort of welfare measure also, it must be subjected to review 5 years down the line. Now let us take Manrega. Today we are $3 trillion economy. When Mr. Modi took over, the Indian economy was something like $1.5 trillion. And when Manrega was introduced in 2005, we were somewhere between $600 to $750 billion economy. Now, what was supposed to be a panacea for jobless growth for a $600 billion economy or a $700 billion economy 15 years back is prescribed as a matter of fact. Without blinking an eye, we just say that we are putting 78,000 crores. Not that I'm saying it should go away. I'm not against it. I'm only raising a point that can we allow this particular program or any particular program in perpetuity without doing a re-evaluation. And all I'm seeking is once in 5 years, we have to necessarily re-evaluate this program and see the efficacy of this program. Now, the counter to this, look at what has happened. The entire farm sector is now cribbing about non-availability of skilled manpower during harvest season, during sowing season because of Manrega. And consequently, they are compelled to hire people at a much higher cost. This has added on to your cost of production. And CACP, the Committee on Agriculture Cost and Prices, has repeatedly gone about increasing the cost of production of various food grains. MSP has increased, food grain inflation has come about, CPI has gone about, WPI has gone about. So all these things have a cascading effect. What I would humbly suggest is chambers like yours who have the ear of the Honorable Finance Minister must necessarily prevail or at least suggest that, look, we cannot be running certain things because it was cast in stone. All these policies are subject to periodical review. Take NPA, for instance. 90-day norm came in the year 1998 or 99 by the Janaki Raman committee, and it was implemented from 2002 or 2003. 20 years has gone by. World has changed. We have one tsunami and 3 massive floods even in Chennai. So given this, I would suggest these are the things that a developing economy needs to revisit, certain fundamental issues that goes about building our regulations. Now coming to the budget numbers. I would think once again that the finance minister was very conservative in the budget numbers. I think she wants to err on the right side rather than being caught on the wrong side. The revenue receipts probably are too tepid. In fact, she thinks about increasing from 20,78,000 crores to 22,04,000 crores. It's hardly 5-6% increase. I would have been wondering whether if 6% revenue growth is the only thing that is going to come about, how is it that we are going to grow at 8%? The numbers don't tally. Prima facie, if numbers go up by say 14-15%, I can agree 8% growth, 6% inflation, they should work it out. But numbers are very, very conservative. The second one, which I would rather laud the finance minister for this, is that she has controlled the fiscal deficit despite not being a fiscal hawk. She has, what has happened is that the economy has shown a tremendous bounce back, and she has profited by it. The type of revenues that she has been collecting on the direct taxes front as well as on the indirect taxes front, including on diesel and petrol, has provided a sufficient cushion that she could bring in the fiscal deficit to 6.9%. But there is one primary concern that probably is not getting addressed at all, which is the primary deficit, which is gross revenue minus gross expenditure is showing a deficit of around, even before interest, we are showing a primary deficit of around 7.2 lakh crores, which is around projected to be around 3% of the GDP. Now, for which I would like to go to the gross debt position of the country, which requires some sort of detailing. The estimated debt of the government of India, we are not talking about Karnataka government, Tamil Nadu government, we are not talking about PSUs, PSCs, guarantees, anything. We're just talking about the gross amount of debt that the government of India will have at the end of, say, March 31, 2022, will be something in the order of 135 lakh crores. 135 lakh crores is the debt. Now, there is nothing wrong in having a debt of 135 lakh crores, provided you have an asset of 135 lakh crores. The government of India's papers say that we have 135 crores of liabilities, but for which we don't have assets to the extent of 80 lakh crores. 80 lakh crores is the amount of liability without assets, which means 60% of your debt is unrepresented by assets, which means 60% of the interest bill is around 10 lakh crores this year, and of which 6 lakh crores we are paying as interest on assets that don't exist, which we have eaten away through revenue deficits over the last 40 years. And if 6 lakh crores were not there in the budget on the expenditure side, the finance minister can have the headroom of even doing away with the GST. You must understand the impact of what I'm trying to say. This is the state of affairs of the finances of the country. But the finance minister seems to be sanguine. She seems to suggest that, look, all that I can do is I will allow the freedom of people to put in maximum amount in terms of their efforts, and we will channelize all our efforts on the infrastructure front. There is, of course, there is a suggestion about interlinking of rivers. The DPRs are being prepared, but I didn't see any allocation in terms of starting the project. Of course, that will be the biggest money spinner in terms of infrastructure. Probably this may happen 2-3 years down the line as some sort of a project that will come about. But today we have to be looking at only roads, rails. Of course, she has made phenomenal improvement in terms of allocation on road, rails, etc. But having said that, I will also try to make 1 or 2 points on water. The allocation has been brilliant. It has gone from 10,000 crores in the year 2021, which was the actuals, and the budgeted for 22-23 is 60,000 crores. That's almost 5 times increase in just 2 years, unparalleled. That means water will be the biggest focus. Of course, the 2 programs that the finance minister talks about, Pradhan Mantri Awas Yojana and the smart cities, apart from the PowerPoint and presentation now and there that comes in, I am not seeing actual results at the ground level of PMAY as well as smart cities. Smart cities in Chennai, in T Nagar, happens to be broadening the footpath and laying down some lamps upside down. This is what has happened. Apart from this, I didn't see anything big time happening. We have spent more than 2 lakh crores in the last 6-7 years. And as far as the capital expenditure is concerned, she has talked about a 7,50,000 crore expenditure, which is again one of the highest allocation that we have seen. One important thing that has been missed out in this allocation has been that of police expenditure. Capital expenditure on police reforms is around 10,500 crores. In fact, many cases in the courts fall out because people go about collecting forensic evidences in crime spots without a standardized forensic kit. In fact, I'm told that the forensic kit standardization is now being thought about by the Home Ministry. If you enter a crime scene of, say, a murder or something else, even the police of collecting various evidences is not standardized because the kits are not standardized, each one up to his own, and there is a lot of loopholes that we lawyers exploit at the court level, and that's how it is. And as far as railways is concerned, she has allocated 1,37,000 crores. I hope that the Vande Bharat Express that she talks about and introduces 400 crores, 400 trains of them, will change the face of Indian Railways. Likewise, the enormous allocation has been made for Ministry of Road and Transport and Highways. Now, coming to some of the tax proposals, I will just deal with 1 or 2. Of course, the digital currency tax, which she has introduced, is long pending, long overdue, but this time they have decided to tax it at 30%, subject to TDS and other things. It's a welcome move. But there is a side story to it, which probably will explode in the next 6 months. All those who are buying cryptocurrencies till date are more or less violating FEMA. FEMA is violated rampantly in the purchase of Bitcoins because Bitcoins purchase as capital asset is not sanctioned under FEMA. So once you pay taxes and you think that you are done away with your digital currency transaction, you may get a notice from RBI and ED asking you to explain and cough up the balance 70%. So I think they virtually want to do away with this cryptocurrency transaction. Incidentally, on the day on which the budget was presented, IMF has warned one of this Latin American countries which has adopted cryptos, Bitcoins as one of its official currencies, has said that unless you jettison Bitcoin, we will not give you any rehabilitation package. So there seems to be a concerted move, because what is all these cryptocurrencies? Cryptocurrencies are private currencies. Now, a sovereign country cannot allow private currencies, period. A sovereign country cannot allow private army, private police, private laws, private currencies. So private currencies or Bitcoins or cryptocurrencies, whatever be their name, are challenging the sovereignty of the country. So the finance minister perhaps has taken the first step, but it is a trailer of a horrible movie. But the main picture will be much more horrible. Let me tell you, it is violation of FEMA. ED is going to jump on those people who are going to get into this transaction. Lastly, I would I'll just take one last provision of the Income Tax Act, which she has amended it, and for worse, which is Section 68 of the Income Tax Act, which I would suggest that somewhere down the line, if she has the trust on the assessees, she must walk the talk. She must say, once the assessees are giving the necessary proof of having taken a loan, that must stop at that. She cannot go back and say the lender must prove his source and go on. And it is not my job to see when I take a loan from you, whether you have a source or not. If I take it by bank, all that I can do is that I presume that you have a source. I cannot audit you or I cannot do a due diligence on you. There is a side story to this also, which is that most of the searches which the income tax conducts, there are notices both by the income tax department for the purposes of taxing it under the normal assessment under 153A, 153C. So that's a different issue. I am not bothered about it. But simultaneously, the money that is being recovered from in the hands of the people is also being challenged as a benami one. So this duality, especially they have not been able to reconcile Section 68 of the Income Tax Act with the provisions of benami law under Section 29 is something that I feel is something that sticks out as a sore thumb. I thought that the budget would bring about some sort of balance between the two. If you want to go about challenging somebody that it is a benami transaction, please do it. I have no issues, but don't tax him on the income tax side. But if you are having taxed him on the income tax side, I don't think it gives some right to the income tax department to also charge him under the benami law. You cannot do both. That is my humble submission. Finally, I would like to close by saying that this is a futuristic budget. Usually, budgets would have the dull and drab issues with some bright spots. This budget has more or less a brilliant vision with, as usual, one or two dark spots. And it is chambers like yours that which can prevail on the finance minister, explain to her that these are the pain points, these are the issues that needs to be addressed. And we must also recognize that there is a limit to which the finance minister can do. Because as I said, the state of the finances of the country or the government is really a cause for concern, because at the end of the day, when we go to meet our makers, I would suggest that we must leave a place which is India far better to our next generation than what it is. But if we are going to borrow from the next generation to run our economy today, which is what fiscal deficit is, which is what primary deficit is, which is what revenue deficit is, whatever be the numbers, whether it is 6.9 or 3.2 or whatever, I think we are not leaving a very great position of strength to our next generation. The next generation will definitely look at us with far less respect, I would say, than what we would actually love to deserve. With this, I will close, and I'll be happy to answer any questions after the panel discussions. Thank you.
Thank you, Kumar Venkateshwar. We'll come back to after PV Srinivas and Deepak Kumarjan panel discussion. And I think you really started the debate inside of budget.
Thank you, sir. Thank you, Dr. Venkatesh, for your wonderful talk on economic impact of budget. May I request Sri PV Srinivasan, Corporate Advisor on Global Tax and Corporate Laws, to give his address on direct tax proposal. Welcome, sir.
I have forwarded my short presentation. If it can be made available on the screen, participants will have the benefit of my presentation. Otherwise, I can even speak it out in case it's not available. I will start while it's being loaded. Let me see whether I can start the discussion right now. The gross revenue collection is about 25 lakh crores. Tax revenue collection is about 25 lakh crores. It is projected to be increased to about 27.5 lakh. The direct tax proportion in the revised estimate is about 50%. Going forward, it is likely to be skewed, and it may become slightly, direct tax may be more than the indirect tax. That's the right direction to be, if I have to say. The keynote speaker, Dr. MRV, did mention that the revenues possibly have been under projected or conservatively projected. It looks like, because if you have a GDP growth and you put a nominal GDP growth, then all the taxes will flow with regarding to the nominal GDP. And therefore, it looks like there's an conservative projection of the revenues. I may also want to look at it slightly differently, that it's not now a very common feature that all tax proposals have to be made only on the budget day. We have proposals throughout the year from time to time. Possibly the finance minister has reserved some kind of a discretion for herself that as we go along, some reforms can come both in the direct taxes as well as in the indirect taxes. In fact, most of the amendments in the direct taxes in the last few years have happened through non-budget mechanism, but nevertheless they've happened. So you may find that the conservative projection may be to reserve a cushion and give some more incentives or some more trust on making productivity a matter of the thrust of the government. If I have to, I have about 20 minutes. I will not take too much time on each of the slides. None of us need to read the slides, let me assure you. So all that we need to do, there is immediately whenever there's a budget presented, immediate anticipation whether the taxes will be increased, the threshold limits will be increased, whether the standard deduction will be given concessions. These are the normal expectations of most citizens. The budget has not touched upon any of this. No rate increase, no threshold increase, no slab changes, nothing has been done. It has been left untouched. So we are left with a budget where we don't have much to speak, if I have to say. So, but nevertheless, there is one correction which is beneficial to all of us, is that the surcharge on long-term capital gains in respect of unsecured securities, now it has got capped to 15%. In a way, that means the ability to invest in shares and securities and get long-term capital gains and limit the tax liability on that, that enhances. So it would possibly an impetus for the capital markets. One important amendment came, which is a cause of concern. It's a concern not because the amendment is not in good taste. Any public policy would be on these lines. Section 37(1), which is a section which allows deduction of expenditure which is not specified elsewhere. It's a general deduction. It says that if there is an expenditure incurred, which is in respect of an offense or prohibited by any law, that would be disallowed. This was a law which was carried out for quite some time. It is there. The pharma industry had its own thinking, and it was always encouraging doctors with some kind of sponsored programs, benefits, and some kind of a perquisites. This has been a matter of contention in tribunals, high courts, and so on and so forth. Some rulings here, some rulings there. It remained, possibly they have all even got to the Supreme Court at this point in time. Supreme Court may adjudicate on it at any point in time. Now the law has made a little tighter. Now it has been said that the offense are prohibited by law need not be in India. It should not be overseas also. Moralistically, it's correct. But it requires that we all get ourselves educated on what is allowable. This is not a law which is prohibited on my business. It is a law which is being prohibited on the business of the person who is receiving the benefits. So I must know which law is going to govern him and which law is prohibited for him and whether the expenditure can be incurred or not. So the law is now tilted. The argument so far is that I may not know your ethics, I may not know your morals, I may not know your limitations. I have given as per my business which is qualified for me, but you receive it, you decide whether you can receive it or not. The law now wants you to determine whether you can receive it before I can give it to you. This is not a very easy onus for us to discharge. That means any kind of an undertaking also may not be sufficient. We need very in-depth knowledge whether we can do business in a foreign country or not. The compounding of an offense, very often when there is a litigation, you may not want to determine whether you are right or wrong. You may settle very early and come out of the litigation because you feel cost of litigation is higher than the amount of settlement you may want to do. This is very common. It's actually becoming so even in India. Today, India is also, cost of litigation is more than sometimes the amount you would pay if you are not litigated. Now, that being the case, if you settle, that compounding, the expenditure and the compounding also goes away. So you find that this is the second point which is come out. So two important takeaways is that foreign laws are also covered and compounding is also taken. This would possibly widen or restricts the ability of businesses to undertake some amount of call on which benefits to give and which benefits not to give, and whether to settle or not to settle. 43B is a deduction which says that if you actually pay, you will get a deduction. There was always a contention that when the loan is converted into some instruments, then automatically we say the loan is paid. The new instrument has its own conditionalities. It is governed by a different law, set of law provisions. It is no more a loan. It is a different instrument. It can be a share. It can be a debenture. It can be where deferred payment conditions can all apply. Share means not a problem. Debentures means converting a loan into another instrument, which is another loan. But a debenture is not a loan. Debenture is a loan with substantially different conditions. Debenture can be transferable also. So in this context, mere conversion of a loan into interest into a loan or a debenture automatically means that the interest will not be allowed going forward, because the law treats it that is no more a payment. There is no actual payment. There's only a deferment of payment, and therefore it would not be allowed to be a deduction. This law is going to possibly, what will happen is financially stretched payers will have to find some mechanism to settle with the debtors. How will they settle? One is to pay. If they don't have money to pay, they have to give some other assurances to do. One of the ways that they will issue debentures. Now, your debentures can be convertible debentures, non-convertible debentures. Those categories are not categories in the law. If it's a compulsory convertible debenture, what will happen? Even that will be treated as non-payment in manner of speaking. So we have to be a little careful as to how these provisions will operate. Little harsh, because it does not reflect the equation between the debtors and creditors, which possibly is the omission. Retrospective amendment and cess, whether a cess is deductible or not, I would say there were some amount of high court decisions emerging that a cess is deductible. Now a very detailed memo has been drawn. The explanatory memorandum distinguishes different cases and says that the high courts are in per inquirium, and the Supreme Court decision contravenes these two high court decisions. It says it's not liable to deduction. It has been a retrospective amendment for 2005-6. Of course, when a retrospective amendment is actually retrospective, they are prospective or retrospective. Supreme Court has held few decisions. One of them is a Vatika decision, which I would like to look at. Maybe we will get to some insights. Whether an amendment is actually retrospective, just because the law says it's retrospective, whether it will become retrospective or not, we can look at it. 17A, if there's a search or any other survey proceedings and so on and so forth, and you have got undisclosed, if you have got undisclosed income, then carry forward losses or business losses, unobserved depreciation, none of them can be offset. So it becomes that you have to virtually add the search related income. If you have got many other attributes which you have accumulated in the past, which are not related to the search assets or such kind of income, still you will not be able to utilize it. And therefore the searched income becomes a straight addition in the context of your business. 14A, I don't know. Somebody can help me? Yes. Yeah, that's correct. Oh, that's all. Yeah. 14A, normally it's a principle of law that if you have an exempt income, actually it's the net income which is always exempt. It is not the gross income which is self-governed. So the expenditure which you incur for earning an income is always disallowable, because what the law would expect you is that agriculture income is exempt. Doesn't mean that agriculture expenditure is deductible. So agriculture income is exempt means it's the net income which is exempt. It is not the gross income which is. No amendment was required. It was a universal truth, if I have to tell you. But still, possibly assessees were claiming certain expenditure which is not related to exempt income, saying that if there is no exempt income, I don't have an income, but I've incurred expenses which would earn an exempt income, not necessarily in that year, it may earn in the future year. Law has not said that even if you don't have exempt income now, expenditure which is incurred for that year will be certainly be disallowed, and therefore you will not get a deduction for those expenses. So you don't have an income earned. There is no actual income reported in your profit loss account or your income statement, but you have incurred certain expenditure. That expenditure will be subject to disallowance under 14A. I thought this may not be too much of opposed to first principle appreciation. The key principle is that if the income actually is the net income, which is always exempt, so expenditure will always get disallowed. Even if there's no income earned for this year, the fact that some expenditures incurred to earn that income, that will be disallowed. 115 BBD, if you have a foreign company which has certain threshold of shareholding, if there's a dividend incurred, 15% is the tax which has been prescribed in the law under the current law. This particular 15% concessional tax has been removed. Foreign dividend now will be treated as any other income from other sources. If you are able to declare output dividend, or you are the company which is receiving a foreign dividend is able to declare a dividend under ATM, you may get a deduction, which is already there in the tax provisions. So you will not get the concessional dividend on that. Section 68, MR Venkatesh carried it. I don't want to say too much to have not a repetition in this session. Source of source should be avoided. If you are now, you have to find not only the source from which you are getting a loan, you must also know whether the source has got a capacity to give you that loan. And if the source does not have, you will go to the next source. If that source does not have, you will go to the third source. Source of source is too difficult. The chain is too long. You will not be able to determine which source to stop, how to do. As you said, there's also a double jeopardy. You may get a Section 68 income and a Benami Act to be applied on the other side. Double jeopardy, normally fiscal laws avoid double jeopardy. It may not be possible to bear the tax incidence in case of double jeopardy. No doubt, it is not the right kind of economy we should be encouraged, but it should not be so burdensome that you get a tax which is very high. Next, possibly is a goodwill is a consequential change, which sorry. One minute, sorry. Oh, sorry. Can you help me? There is a slump sale was a slump transfer. People were getting some kind of a benefit on some slump sale. Put the slide number 4 if you can. Yeah, slump sale was a slump transfer. That has been clarified to say slump sale has been removed. Sale means there is a connotation of a different contractual arrangement. Transfer is a wider connotation, and therefore you have got a clarification on that. There have been decisions which in a merger, demerger, you will find that quite a few arrangements have been made. But whenever there's a merger, in Indian law at least, it is a retrospective amendment. Retrospective. We choose the appointed date. The merger gets sanctioned by the court or the tribunal much later. By the time the merger happens, the transferor company has already merged with the transferee company. And how to make an assessment on the transferor company, which is no more. Normally, the assessing officers continue to make an assessment on a company which is non-existent. Courts have held that that assessment is not valid. Amendments have been brought to say that even if it is made on the predecessor company, it will be still valid on the successor company. Nobody can grudge it because you escape an assessment on technicality. That may not be a good law to sustain over a period of time. That courts have held for over some time. I think we have got the benefit of those kind of laws for some time. We may not be able to. Then possibly successor entity. There are certain IBS related provisions where tax liability also can be reduced under IBS regulations. If the tax liability, tax demands can be reduced by IBS regulations, by NCLT, then how to give effect to it? 156A has been introduced. You can reduce the demand and therefore have a reduced demand being stated for the recovery. Timelines have been extended for 115 new companies which are setting for manufacturing the 15% rate. It was earlier, now it has been extended up to 31st March 2024. Startups also have been extended up to 2023. Charity provisions have been aligned. There are different charity provisions, 1023C, section 11. These two have all been aligned. Now the penalty provisions, bookkeeping provisions, reporting provisions, and consequences of misuse, violations, everything have been aligned. So the two provisions are standing together more or less at the same platform. TDS related provisions. This I thought the burden on compliance, burden of TDS on compliance is higher than to navigate and find out those who are not compliant. So as and when the TDS provisions are broadened, we have to think that the government is thinking that I will use the compliant mechanism to ensure that the non-compliant come on board. This enhances the cost for the compliance. After all, if there's a TDS, there's a tax to be deducted, remitted, return to be filed, uploaded, and there's a penalty to be suffered in case there's no deduction, interest to be suffered. So the cost of compliance would go. I would think that the government has enhanced it, particularly 28(4). If there's a benefit or perquisite which is granted in a profession, while I make available that, a 10% withholding is like holding from professional fees for technical services. But the reality is that the how to identify a benefit, how to do a perquisite valuation, what constitutes a benefit, which is in the nature of, in the discharge of, it's in the performance of duty, or what constitutes a benefit as a reward for performance of services. These are things which will become slightly gray as we go along. 201A, not much of an amendment. I will not skip too much time on this. I will possibly come anti-abuse. Whenever there's a bonus stripping and dividend stripping, they are all available to shares today. On units of mutual funds also. Now the law has been extended to units of InvIT, rate, alternate investment funds and others. So every investments, wherever there's a bonus stripping or a dividend stripping, those provisions will apply, and the loss which is incurred will be disallowed on the, because this is, you don't get a double benefit. You don't get a loss set off and an income at the same point in time. So you don't get a stripping mechanism. Cooperative societies, we may not be too concerned. MAT has been reduced from 18.5% to 15%. There are certain COVID-related benefits, which are all to be interesting looked at. Any benefit given by an employer for the treatment, actual expenditure, will be not taxed in the hands of the employee. So anything related to COVID, employer to employee, for the actual treatment will not be. So actuals reimbursement will not be subject to tax. Any sum received as a ex gratia on the death by an employer. So if an employee dies of COVID and the employer gives a ex gratia, any sum, the law has not put a limit to it. I presume that employer-employee will decide as to what's the right amount to be given. But if a person, common, not in an employer-employee situation, if any person receives a compensation related to death of COVID, then it has been put as 10 lakhs as the limit. Now, this is not covered under a normal gift. A gift received is taxable under 56(2)(10). This particular gift is not taxable, even though it may amount to this. I will possibly have only one particular last one on reassessments. Last year, the entire reassessment was recast. The earlier regimes were all given. They were all stable for quite a number of years. The law had stabilized it, courts had stabilized it. But still, it was recast to give an impression that now we are reducing the uncertainty. The 6 years is being reduced to 3 years. Unusual circumstances will be only 10 years, only when there is no asset-related one. Now, that asset-related has been broadened to include 2 more criteria. You may see from the screen, the criteria is expenditure in respect of a transaction, event, etc. Or any entries which is found in the books. If I maintain books, you will always find entries there. If the entry is the basis on which you are going to add income, is either a failure of the original assessment. Does it give the change of opinion as the basis of this particular determination? That criteria will have to be set again, which the Supreme Court has already accepted under the earlier regime. So whether the assessing officer can keep changing opinion from time to time, I do not think he can. The law is not emerging so clearly on this. Possibly we have to establish those principles all over again. Power to do revisionary powers by commissioner. A lot of international financier services center related benefits have been given, which may not be very relevant to this group at this point in time. Virtual digital asset, Mr. MRV has already spoken. A tax at 30% is given. One may expect that tax laws can neither legalize a transaction nor make it illegal. Illegal income can also be taxed. Legal income must be taxed. So it's not that the taxation laws can confer any legality on any digital currency, even if it had to be covered. So we can leave it at that. The last one possibly is the 139(8). We can file an updated return within 2 years. paying 25% tax, extra tax, there are certain conditions. The conditions are too many. Even a completion of an assessment, even issuance of notice, all those things will take away the right to file the updated return. But one may take it in directionally. What the government says that if you know that you have got an income which you are underreported, we give you an opportunity. You can go and revise your return. If you do it 1 year later, you pay 25% more along with tax and interest. If you find it 2 years later, you can pay 50% along with interest. Directionally, it's a good move. It is helping in dispute resolution. Those who are caught on the wrong foot, they will always be able to come out of the system bona fidely without suffering a penalty, without suffering a prosecution. With that, I'll end my comments. Thank you.
Thank you, sir. Thank you, Dr. P.V. Srinivasan, for the wonderful talk on direct tax proposals. May I request Deepak Kumar Jain, founder, Associate Advisor, to make his speech. Please welcome, sir.
Good evening, friends. Before I begin, let me thank FKCCI for partnering with us for this budget session. It's really an honor and a privilege for us to kind of jointly kind of present the updates on Union Budget 2022-23. What is also encouraging is to also see that despite COVID, we have good physical participation and a very encouraging 200 plus in terms of people participating virtually. Right? I think a lot of effort for us in terms, I mean, I'm sure from Finance Minister's perspective, looking at the way in which the economy is and how Mr. Dr. MRV basically presented the state of the economy. I'm sure a lot of effort technically has kind of gone in ensuring that, I mean, every finance minister's goal is to kind of ensure that they try and kind of meet everybody's expectation, but largely I think there's always a plus and a minus. Some hits which are in the good direction, some hits which probably hit the wrong direction that way. But all said and done, I think the way in which year on year we have kind of attended to areas of concern. In fact, last couple of years, we would say that the budget is largely focused on removing anomalies. So to that extent, I would say it's always a progressive kind of budget. So I'm sure, I mean, everyone has his perspective, but sometimes, I mean, many people say that dikhane ke dant or khane ke dant alag hote hain. So there is always something in the budget where the fine print talks a little better, right? So maybe I'll try and kind of do my bit in the available time. I think we have exceeded a few minutes as today, as now. So maybe what I'll do is probably in my slides, I'll try and kind of cover it till 5:30 so that we have points which are kind of, I'm sure each of us may kind of touch upon aspects which we believe is relevant to the audience here. But yeah, whatever is not kind of covered and whichever you believe is relevant, I'm sure we have a wonderful panel to kind of address that. Yeah. So before I move on to the stated proposals from an indirect tax perspective, these are some numbers which may be interesting for us to kind of understand. Here is a chart which captures the GST revenue from January 2020 till Jan 2022. I mean, if you see, it's a circuitous, I mean, you have the roller coaster ride, which basically says, I mean, if you see for the month of, let's say, Feb 2020, we had a little more than 105,000 crores in terms of GST revenue. And after the first lockdown, the revenue kind of comes down to 32,200 crores. And then we see that it touches the peak in April 2021 with 141,000 crores. And then again, with the second lockdown, it kind of comes down and then gradually kind of stabilizes. The way in which GST revenue collections have kind of shown, it is very clear that despite worst diversities, we are all Indians, right? We are learned to kind of ensure that even if we fall, we are able to kind of stand up and stabilize. And last 6 months of revenue actually showcases that it's definitely in a very encouraging kind of situation. I'm sure in panel, we can have questions around that, which MR, we can also kind of address that way. The interesting aspect in terms of, I would say, in terms of revenue collections, which I think PVS and even IS Prasad also mentioned, is the modest kind of projections in terms of the next year's kind of collections. So maybe I think if we were to see the revenue collections, while it has kind of come to a number which is close to 24%, maybe the next year's collections is about 10% or maybe a little lower than 10% in terms of that numbers. All said and done, I'm sure the year to come, we are definitely kind of expecting that the fiscal deficit, the revenue deficit kind of comes down, which the interest burden also kind of makes it bearable and makes it becomes good for all of us from that perspective. Yeah. So let me move on directly to the stated, sorry. Yeah. Next slide, please. Yeah. There's an interesting, I mean, we all know that input tax credit has always been, from a government's perspective, an area of concern. They've always kind of looked at not only penalizing people who have kind of issued fake invoices, but also tried and kind of brought in provisions which basically protect the government to ensure that if they're kind of giving you the credit, you as a person who's kind of taking credit, you have also validated that the invoice or the document on the basis of which you're taking credit is valid. I think they have kind of gone a little aggressive here to kind of look at protecting or kind of managing the 1% fraudulent transaction. They've kind of looked at penalizing the 99% of people who are kind of probably compliant. So they have, I mean, this budget basically has kind of added a few more conditions to the person receiving the credit to kind of satisfy to say that whether the invoice which he has, whether the amount, whether or not he's kind of paid it, he should kind of satisfy these additional conditions to ensure that the credit taken by him is valid. And you'll be amazed to kind of see how as a recipient, we'll have to kind of look at satisfying these kind of conditions. One is, if the person from whom you have received the services, if he's a person who's kind of taken the registration, new registration, then for some period of time, there's a cooling off period within which you cannot take credit. So the government will notify that after a person has kind of got registration, maybe for maybe 2 months or 3 months, as they may kind of prescribe, the person receiving, even if he's kind of charged the tax, even if the government has kind of collected the tax, the person receiving the services, even if he has kind of paid it to the supplier, cannot kind of avail the credit. I mean, very archaic in terms of the provision. If the supplier has defaulted in kind of paying the tax, if the supplier has kind of declared, when he files his GSTR1, which is the return turnover for outward, and when he's kind of paying when he files his monthly return and pays the outward taxes, if there is difference between the amount declared in GSTR1, which is outward revenue, and the amount which is kind of paid, then the recipient again is kind of penalized here. So while the government has means and access to kind of identify how much he's kind of done, they can kind of have means and access to access him, but they're penalizing the person who's kind of receiving the kind of services. Each of these kind of conditions, if you were to see, these are basically violations of the supplier. If he's kind of done something wrong, then the person who's kind of receiving services from them is kind of penalized. Definitely this provision, FKCCI post this, IS Prasad also mentioned that finance minister is kind of coming on 9th of Feb. I'm sure we should kind of prepare a good recommendation. Definitely this is one such provision which calls for withdrawal or a suitable kind of amendment that way. Yeah, the corresponding, I would say, the amendment in section 16 to BA, which basically kind of, from a statute perspective, restricting or having the recipient to kind of restrict basis this, so the government empowering the recipient to kind of restrict this is kind of given in section 16 to BA. The credit which was kind of taken largely was stated to be as under self-assessment, provisional basis. What the statute now says is that whatever you take it is on a self-assessment, that you have kind of taken the credit on assessing yourself. And if that credit which you have taken on a self-assessment basis is more than the credit which is eligible, then you have to kind of pay back with interest. and particularly in a circumstance where the supplier has not kind of paid the tax, and you can re-avail it after the kind of supplier has kind of paid the tax. So one interesting thing to be noted here is, while I may have to kind of reverse the credit with interest, while re-availing the credit, I cannot kind of claim refund, or interest kind of becomes a cost. So it would be very important for us to kind of have our purchase orders or contracts with our suppliers in a manner which ensure that these costs are, we are able to kind of recover it back from the supplier in case of actions which basically lead to cost in our books on account of his kind of inaction. There are certain enabling provisions. So these are provisions which basically, we had rules, but probably was falling short in terms of having enabling provision in the statute. So definitely there were, we have seen that in the last 2 years or so, there were several cases where the government had kind of blocked credits or did not allow, there was a restriction in terms of utilization of the amount of credit which is lying in our electronic credit ledger. So they were definitely, when notices were being sent, there were definitely arguments being raised by the SSCs to say that there is no enabling provision in the statute. So rather than kind of getting into a stage where, unfortunately, we don't have a tribunal, rather than getting into a stage, the government probably thought it fit to kind of bring in an enabling provision to ensure that in the event of a litigation, the fact that it is not there in the statute is not against the revenue. Section 54 talks about provisions connected with refund, and any supplies which we do to a unit in SEZ, there was no specific provision to say within which period you can kind of claim refund. This was, I would say, omission in the statute, which they have kind of corrected. So they have brought in very specifically to say that if you are claiming refund for supplies to an SEZ, 2 years from the month in which you have raised the invoice would be the period within which you'll have to kind of claim refund. So as I said, this is more of a reformative or thing which is to kind of plug the anomaly. One thing which is something which we have been kind of making representations from, particularly during the COVID regime, through all trade associations to the government, is to kind of allow, if there is a cash balance sitting in a particular branch, and if there is a liability in another branch, allowing the unutilized cash balance in this particular registration to be utilized in another registration. So this budget brings about a favorable kind of a amendment, which, sorry, it's kind of gone ahead. Sorry. Yeah, so it brings about an enabling provision to state that you can transfer the amount sitting in your cash ledger in the from one branch to another branch. That way. So there is already a provision in the statute to allow interhead transfer. That is, if you have a balance in SGST, you can transfer it to CS or I that way. So this did not allow, current provisions do not allow transfer of this balance from one registration to the other registration. So definitely this is a welcome kind of amendment. And the other, I would say, perennial matter in litigation was whenever there is an irregular credit taken, even if the credit taken was not utilized, department was demanding interest, saying that Section 50, the way in which it was worded, requires the SSC, even if an irregular credit is taken, even if it is not utilized, interest implications kind of come in. So here again, representations have been made, and government has been fortunate to kind of consider the representation and bring in an amendment which was basically in line with what was there in the pre-GST regime. So the certificate credit rules under the service tax and central excise era had a similar provision to say that interest is payable only when the credit which is taken irregularly is actually utilized. So if you take a credit irregularly, realize it that it is irregular or wrong, and then reverse it without kind of utilizing interest, because interest is always compensatory. Interest implications would not kind of arise that way. So here again, it's a welcome kind of move. We have been seeing that, to allow the recipient to kind of take credit, many of the suppliers would file GST R1 but not 3B, or cases vice versa, and file 3Bs of a particular month but not of the previous months. So there has been a corrective amendment in the statute to say that it has to be sequential. You can't file GST R3B unless you filed one, and in terms of the sequence, it has to be filed monthly. So you file the earlier months before and then the subsequent kind of months to follow. So all these are definitely kind of corrective, I would say required amendments which has kind of happened in the from a GST perspective. I think from a customs perspective, definitely I think after the GST has kind of come in, definitely the budgetary amendments, because GST is largely, which is the prerogative of the GST Council, all these amendments which have happened, GST largely is basis the recommendation which flow through the GST kind of council. But from a customs perspective, I mean, from a limitation perspective, from a customs law perspective, here again, I think they have kind of done corrective or reformative kind of changes, and nothing major or substantial from a point perspective. So one is that, in fact, PV Srinivasan is here. Wipro is one of the very fortunate to have been, I mean, when the SEZ law kind of came in, I remember PVS mentioning that government approached Wipro to kind of set up the first SEZ in India. So now the government is contemplating to kind of reorganize the entire SEZ law, where the participation of the state would also be there, and hopefully revamp the existing SEZs in India that way. So I'm sure we will hear more in the panel discussion from PVS on this particular point. Similarly, I think in terms of the advance ruling, they have kind of brought in a limitation to say that the advance rulings which are kind of given in will have a limitation period of 3 years. Even they have kind of brought in the limitation for advance rulings which have already been issued. So after the presidential assent kind of comes in, and AR will kind of, AR which is kind of issued under the customs law will have a limitation or validity only for 3 years. Now, why the government has kind of chosen this is probably government to kind of fit to kind of answer that. It's really unfortunate. Maybe, I mean, if the law changes, does not change, and the AR does not have a validity, basically kind of raises the question on the significance of AR itself that way. So, and the other welcome thing which the government has kind of done is to reorganize the entire, I mean, there were several plethora of notifications which were kind of reducing the effective rate of tax. The government has kind of removed those notifications, merged it in the tariff, and kind of brought those rates in terms of the tariff itself. And we've also seen many kind of companies who publish sensitive information. I mean, I don't want to kind of name them, which is available in terms of for us to kind of access. So government is also kind of penalizing them if these companies who publish sensitive information, which basically kind of reveal. I mean, sometimes it is good for us to kind of always get that, but for the person whose information gets published, it puts that other person into backfront. So statutorily, the government has kind of come out with a penalizing provision, stating that if providing penalties for companies which kind of publish such sensitive information. And the other important amendment is with respect to assessees who import goods under concessional rate of duty. So they will have to now kind of have a monthly compliance where they'll have to kind of file returns. Hitherto, it was, I mean, where we had to kind of submit proof of export and satisfy the imports under concessional duties, but now we'll have to kind of progressively file returns on a periodic basis. So that's something which has kind of come in, and clarificatory amendments, which I would not, looking at the time, may not want to kind of deal with in detail. So, so definitely I would say from a government's perspective, if we were to see the nature of amendments, largely are reformative in nature. And the purpose of, in certain cases, was to kind of reduce the litigation. So I'm sure the government has its limitation in terms of the changes there. So I'm sure the focus of this budget has been probably beyond taxes, and they have kind of looked at revamping by spending more on in terms of capex, by revamping the economy. So I'm sure that the government is in the right direction to revive. And I'm sure, I mean, on a lighter note, I would want to kind of say that, as previous mentioned, that the general expectation is that there are reduction in terms of taxes, where if you see from people filing the taxes in terms of assessees who file the return of income, they only constitute 6%, right? Into 6 crore assessees, or maybe less than 6%, maybe about 4%. But in terms of people who are unhappy about the government not reducing the rates, definitely are about 80%. So that's the irony in terms of our thing. But I'm sure the government, in my personal view, the government has definitely done good looking at the kind of situation, and definitely it is some responsibility from our side also to kind of look at the way in which we organize our business, and ensuring that progressively everyone kind of progresses that way. Thank you so much for this opportunity. Look forward to the panel discussion, where Shravan can introduce the panelist and then kind of take this discussion forward. Thank you.
Thank you, PV Srinivas and Deepak Kumar Jain for the insight of direct tax and direct proposal. We thought there is no change in the income tax, but to look at the book size of 300 pages, it requires almost 300 days by the time next budget comes. Over to Shravan for.
Thank you, Deepak Jain, for kind of sharing snippets into the amendments that were proposed in the budget in the GST law. Friends, let me take this opportunity to introduce two panelists who will be joining us in the ensuing panel discussion. First and foremost, we have physically with us Jain Chatterjee. He's a chartered accountant and a management graduate from IMD, Switzerland. He is presently serving as the Vice President and Country Tax Manager of ABB India. He is the head of tax for ABB India, as well as the Global Industries and Services Private Limited, ABB Global Business and Substations Private Limited. He has about 29 years of experience in accounts, audit, and taxation. Before joining ABB, he was holding various leading positions in taxation, including as the head of taxation with Schneider Electric's Gurgaon. He's presently also responsible for the EMEA region as a part of his India cluster responsibilities that he handles. In addition to this responsibility, he's one of the 7 members in ABB Global Tax Strategy Board, Zurich, which is also involved in various key global tax initiatives. With this introduction, I welcome Jain Chatterjee to this gathering. Friends, we have 2 more panelists who are joining us virtually. First, let me take the privilege of introducing Shri Kamal Bali. Kamal Bali sir has been spearheading the reputed Indian and multinational organizations as the president and CEO for 2 decades with the Volvo Group. He's presently the president and the managing director of Volvo Group, a role that he took up roughly 7 years back, that is from the year 2014. He has been serving in this capacity. He is an alumni of IIT Roorkee and has an illustrious career spanning 40 years, largely in the automotive and engineering industry. He was knighted and he was awarded one of the Sweden's highest honors in the Royal Order of the Polar Star Commander by the Majesties the King and Queen of Sweden for his untiring support on the Swedish commerce. He has served in multiple positions. He was the chairman of the board of Swedish Chamber of Commerce India, that is SCCI. He is on the board of the Invest Karnataka Forum. He is an independent director on the board of commercial entity of Department of Space, Government of India, and he is also the past chairman of CII Karnataka. With this introduction, I welcome Kamal Bali to this August gathering. And finally, ladies and gentlemen, we have our own past president of FKCCI, CA D. Muralidhar sir. He is, apart from being a chartered accountant, he is also an MBA from IIM Bangalore. He is also a cost and management accountant from London. He is presently serving as a whole-time director in SNAM group of companies with 5 manufacturing facilities and a standalone world-class R&D center in India. He is a Rotary International Group Subsidy Exchange holder, a scholar. He was awarded the CA Business Leader for Emerging Corporates, Manufacturing and Infrastructure by ICAI for his noteworthy contributions. He was also awarded with the most coveted Distinguished Alumni Award from IIM Bangalore. With this introduction, I present to you D. Muralidhar sir. Friends, before we get on to the panel discussion, FKCCI thought it is kind of, we will take the privilege of honoring the speakers that we have over here today. I request the president and the other dignitaries on the dais. I also request the co-chairman of the Central Taxes Committee, Ganpat Kawar, to kindly join as we felicitate CA PV Srinivasan sir for his wonderful talk and sharing his insights in the income tax proposals that were there in the budget. I request the dignitaries to kindly honor the other speakers that we have on the dais. We have Mr. Chatterjee from ABB Limited, and then followed by Mr. Deepak Kumar Jain from Acolyte Advisors, please. AV team, can you also pin Mr. M.R. Venkatesh? Friends, I hand over the panel discussion to Deepak Kumar Jain. Go ahead, sir.
Thank you, Shravan. I think the best part in any budget discussion is the panel discussion session. I'm sure in the remarks which I had kind of mentioned, हाथी के दांत दिखाने के और खाने के अलग होते हैं. Largely, it is with that kind of thing that yes, there is always something in the fine print which we miss out, and the kind of panel which we have today here, it is largely representing, I would say, every segment and every aspect. I'm sure whatever we would want to kind of get ourselves clarified can be kind of done with this panel. So before I kind of start the moderation session, I would request the participants who are there virtually, if they have any questions, they could kind of, I mean, in the comments section, they could kind of share it so that our team could kind of filter those questions and give it to us. And when we kind of open it up for the audience here, those questions can kind of be placed to the panelist for it to be kind of addressed. Now, since I'll also request Shravan to also kind of support me in this kind of panel discussion here. Now, since Dr. MRV, PVS, and I have kind of got the opportunity to speak, maybe the way we could kind of structure this largely is to have Mr. Muralidhar, Kamal Bali, and Jayanta to first start with their opening remarks. So I would request Mr. Muralidhar and then Jayanta and then Kamal Bali in that order to kind of give their opening remarks in terms of their perspective of the budget and anything which they would want to kind of share to the audience, which may be kind of beneficial to them. And then after their opening remarks, maybe there are certain questions which has already kind of come to us. Maybe we'll circulate among the panelists, and then we'll kind of have people who are present here as well as people who are virtually. We'll also have some of their where they can ask questions directly to the panelists. So that's how we can kind of structure that. So is that okay, sir? Yeah. So I'll request Muralidhar to start in terms of his opening remark for on the budget, and then kind of pass it on to Jayanta. Yeah. Yeah. So Mr. Muralidhar, I think we can kind of take a couple of minutes in terms of sharing your opening remarks here.
AV team, kindly unmute Muralidhar.
Can we unmute Muralidhar here? Yeah, yeah.
Yeah, I think it is unmuted now. Are you audible? Am I audible to you, please?
You are audible, sir.
Am I audible?
Audible, very clear, sir.
Okay. Thank you very much. Good evening to all of you, Mr. M.R. Venkatesh and other distinguished panelists, Mr. Deepak, Mr. Shravan, Mr. Prasad, Senior Vice President, Vice President, and the Secretary General. Thank you very much for taking me to this panel discussion, because I am more of a generalist, not a specialist like the earlier three people who talked about the budget in such a great detail. However, having been a keen observer of the developments over the last 30-40 years, anybody tends to form their own opinions about the budget and the contents of the budget and what was expected and what was delivered. The couple of things what I expected from the budget which was disappointing to me, of following. One is there are three solid research that took place before the budget presentation, and some of this information was private to the Finance Ministry also. The People's Research India Consumer Research or survey is a very, very startling findings there. It says post-budget and post-COVID and pre-COVID, the bottom 20% of the population of the country, the income has dropped by 53%. And the top 20% of the income has gone up by about 40%, to be precise, 39% in the COVID period. This only sends the signals that there is a tremendous amount of stress at the bottom 20% of the population of the country. The CME data also says more people have gone into become jobless in the last during the COVID pandemic, and they are still to recover from that. The latest survey of Mint Sea-Water data confirms all these things and says that the inflation has been so high, the average family requires much more money today than 2 years ago to keep it going. So all these three surveys indicate very clearly that there is a tremendous amount of stress in the bottom 20 to 25% of the population of the country. And many other surveys also have said that the amount of jobs available, the amount of money available with the people, also reflected in the demand in the economy, is that there is a stress. So I expected the finance minister to do something about these issues so that some amount of handholding they could have done. I know very well that last couple of years, some announcements were made that 6,000 rupees payments to the farmers and free gas and toilets and housing loans and a lot of Manrega, all these things are already there. But we are in such a peculiar situation that any special situation like this requires special kind of attention and special kind of emphasis from the government of India. However, on this area, I was a little disappointed. You know, if due to pandemic, our tax collections were affected, then the finance minister did not have the sufficient elbow room to maneuver and be a little more aggressive in looking into these issues. But what we have seen, and everybody knows that the tax collections this year has been very buoyant, and it was much more than expected. And the finance ministry had tremendous amount of elbow room to go both on the sides of being liberal in taking care of the bottom 20% of the population, and also give a lot of incentives for growth. She could have attempted both, but I find that she has attempted only one side of it. She has given tremendous amount of focus to growth through heavy capital spending, which is much more than what anybody would have expected. And that is why most of us who are in the top, say, 20% of the population, everybody seems to be Economic Times, you take Mint or any other newspaper, any other channel, it's only talking about positive things about the budget. But unfortunately, the bottom 20% of the population of the country continues to suffer, and the trickle-down effect because of the growth, what the bottom 20% of the population would expect may take a long time. That is point one. Point two is there is amount of the 4 pillars or 4 boxes or 4 verticals. What the government has done is a very good initiative. Lot of thought process has gone in. The finance minister has interacted with all groups, all ministries, requirements of all the departments, and she has combined all these things, taken into account what they require for the next 5 years, 10 years, 15 years, and she has incorporated and she has started the process of solving all those issues. This is a tremendous amount of effort by the finance ministry, which we do not know really well whether they will be able to handle this kind of change. Being a businessman and dealing with the bureaucracy from morning to evening, I know the bureaucrats themselves at all levels are finding it difficult to accept these changes which are coming in so fast on digitization of many aspects of the business and the compliances requirements. Both the users and the government is finding it difficult because, many times I feel the government and the bureaucracy does not have the bandwidth to handle so much of changes in such a short period of time. The intentions are very good. If all the proposals get implemented, then I think it's a good augury for the growth prospects. But I have my doubt because, today we are talking about linking of rivers, which was proposed by Vajpayee's government. Nothing has happened in last so many years. And again, we are talking about this. There are any number of examples like monetization of assets was talked about. Very, very less was done about it. So any initiative by the government with not sufficient amount of bandwidth at the bureaucracy level, I do not know whether the government will be able to implement all the changes that they have indicated. Some of them can be implemented, but some of them cannot be implemented. But only being in business, I would like to say that the compliances load on all businesses has increased tremendously in the last 2-3 years, which they are finding it difficult. So either you take on direct taxes or indirect taxes, but the silver lining is the bringing in of GST, which has made our lives, businessmen's life easier, but still the compliances are very, very difficult. Smaller businesses who do not have that kind of knowledge to do all the compliances are really finding it difficult to cope up with these things. So all these changes are required, but people have to be very practical as to whether we can do this or not. These are my basic comments about the overall budget, but there are a lot of items. If you give me 2-3 minutes more time, I would like to tell you what are the areas, what I find is very interesting in the budget.
Let's do it like this, Mr. Muralidhar.
I just see what the finance minister has done is, it's a very exceptional move she has made, is to include the role of states in implementing most of the budget, many budget proposals, which is a very good thing. Normally, it's the central government's action plan only, but here we see that in many areas, state governments are being asked to chip in also. This is a very good move that I think this is the best way to go forward also. And one example is that the outlay for infrastructure spending by the state governments, where it is financed by the central government on a loan basis, is increased from 15,000 crores to 1 lakh crores. Huge amount. So that means they are taking the states into confidence to do the implementation. This is a very good move in general. So with these comments, I think we have another 3 panelists who want to come in and comment. So I will stop at this. I can take any questions on specific proposals. I can take questions. Thank you.
Thank you, Mr. Muralidhar. So I think the kind of touch base which you kind of did in your opening remarks is really wonderful. You touched upon aspects where government needs to kind of concentrate, aspects where the government has kind of done well. So I think in the short time, you have kind of given a snapshot of what the government has really done, and also probably laid down your expectations that how the government can kind of progress and do things better. I will now request Jain to share his opening remarks in a short, this one, and then probably we'll request the next panelist to kind of share his thoughts. Over to you, Jain.
Hello, can you hear me? Yes. Yeah, okay. Thank you for inviting me for this discussion. So I speak from the industry, and so I would like to, first give my thoughts about the budget, and then maybe something specific which the industry looks. So the budget, I feel it is quite good. It is more like a corporate, planning for a capital expenditure growth. So, and as Mr. Muralidhar also told that, if you have to address to the lower income group, the lower 20% of the population, I think the investment in the capital investments will generate a lot of job and lot of developments. But what I'm worried actually, we every time bring in so much changes, that the cost of compliance or the cost of managing these things is very challenging. So big companies may do it, but smaller companies or medium-sized companies find it very difficult. And then the government is also putting the responsibility of the department to the companies to monitor that whether the credit that you are availing, whether the vendor has paid it or filed the return for income tax or the GST. So everything is moving to the companies. So if this is the direction, like I think one of the speakers spoke about Roosevelt in US. So then in US, they give a percentage of the tax collection, because if indirect tax or the TDS, it is collected by the industry and we are supporting the government for the fund collection. So we should get a percentage of that as an incentive so that we comply on that. So it cannot be one way. Okay, we can do this job, but you also give us some incentive. The other thing that is coming up, the changes in the, this litigation. So in 2 years back when the Vivad Se Vishwas Tak came, so, I was also invited for the discussion with the finance minister. So they did not take my point. So my point is that, or maybe the industry feels, maybe, somebody will echo with me or may not agree, that there are institutions already there. Okay. We don't think that the past is always bad and the new is only good. So we can make those things more structured rather than, bringing in that settlement scheme, or maybe that the department will now go for if there is a litigation in the same jurisdiction or the high court. So it brings in a lot of uncertainties. What the industry looks is more of a certainty. If this is a matter, I go to a level of appeal, first level, second level, high court, Supreme Court. If I have a time frame that, that litigations get addressed in the tax with the tax commissioner or the tribunal or the high court, then, things can be more certain. So because, and one way, it is becoming more, potential than the performance. India, I think we have the best time now. And I feel proud to be in this point of time in history. Tomorrow, we can say that we have bounced back. India, I think with the 2 or 3 waves, we are still doing so good. As Deepak also said, that we have reached the same GST collection, which we did it 1 year, 9 months back. So that means the resilience is there. India, we can fight back. We may have a lot of deficiencies, but we are doing it. But give us those simple benefits, so that we can take this to the second level. If we have these uncertainties continued, budget after budget, government after government, then we will not be able to do that. So that is my point. Only maybe the capital expenditure, the capital gain tax, there is an advantage. But otherwise, it is good for the future looking. We are looking for 25 years now. And that makes like, when we see for Singapore or other countries, they have a 10-year target. So if this continue, the government, the future governments also continue this way, we will have a growth pattern, from which is, basically embedded or founded today. I would like to conclude with this, and maybe we can take a question.
Thank you, Jayanta. I think Dr. M.R. Venkatesh had kind of expressed that he has another meeting. So maybe what I will request Mr. Kamal Bali is to kind of give a short perspective from his side, and then we'll kind of take a question or so with Dr. MRV. Then he could kind of, since he has another commitment, maybe he can kind of leave, and then the other panelists could kind of continue. So I'll request Kamal Bali to kind of quickly share his opening remarks, and then we'll move on to Dr. MRV.
Thank you and good evening. Thank you, FKCCI. Am I audible? Yes, sir, you're audible. Yeah, okay, thank you. Thank you for inviting me to this very important post-budget session. I think the previous speakers have already talked enough and covered a lot of ground, so I will not repeat the same. Instead, I will spend just 2 to 3 minutes on basically one of the most important critical success factors for our country, which is manufacturing. And I think Mr. M.R. Venkatesh already alluded to that. I will spend 2 to 3 minutes on that. So let me start by saying that this budget was being presented in the context of 2 major things. One is the pain which we have gone through over the last 2 years of the pandemic, and also at the same time, some lofty goals and vision of India at 2047, seeking to catapult the Indian economy to $5 trillion by 25-26, $10 trillion by 2035, and $25 trillion by 2047 when India becomes 100. For the above dream and vision, we need to grow between 8 to 10%, at least for the next 8 to 10 years. We all know that. And for this, the economy has to fire on several engines, such as manufacturing must gallop, exports should grow exponentially, agriculture must transform, and our services sector should continue to lead on the back of digital revolution. At the government's largesse or record provision for infrastructure spend, both physical and social, is clearly envisioned as a multiple medium-term growth engine for the economy. I believe this is in the right direction, as it will address the very compelling need for improvement of logistics, health and education infrastructure. And this is really the backbone for the manufacturing. So let me just let you know that logistics has been one of the major issues for our manufacturing, staying stuck at 13 to 15% of GDP, what Mr. M.R. Venkatesh alluded to. I think the needle has not moved much in
technical issue. Mr. Kamal Bali, I think there's some technical issue. Yeah, so maybe while I think we have kind of heard Kamal Bali, so I think he rightly pointed out, definitely from a manufacturing perspective needs to be the focus area, propelled by, I think currently India is definitely known to be a services economy, and how digital can kind of propel that particular growth will definitely kind of benefit and have an overall kind of development which is kind of required. Certainly kind of, I'm sure all of us would kind of echo his kind of perspective. Now, since Dr. M.R. Venkatesh has certain commitments, maybe we will kind of have the first privilege to him in terms of questions that way. So I think there are a couple of questions which are kind of coming in. Maybe the one which has kind of come is with respect to, I mean, it is illustrated that yes, COVID has kind of created three segments. One which is definitely severely impacted in terms of the way in which the adversity is in terms of business, in terms of life and otherwise. Second are people who have kind of got benefited in terms of this adversity. So there are definitely businesses in terms of pharmaceuticals or businesses who were kind of probably sellers of laptops and IT equipments that way. And third are cases where probably the ones who had the money power or the muscle power probably did it better than the ones who didn't have as much in terms of the as I think Mr. Muralidhar also pointed out, the 20% or probably the segment which is the MSME probably in terms of percentage may contribute more. So given that this was clearly visible from a government's perspective, what do you think, Dr. MRV, that does this budget actually kind of addresses and bring about a level playing field for these kind of three? I mean, does it bridge the gap and support the people who are kind of significantly impacted, or build the people who need impact, the kind of support? What is your thoughts on that?
See, on the social sector spending, there has been hardly any cut except to that extent of some 25,000 crores in Manrega, which is expected because you expect the economy to grow at 8%. You have capex programs, you have 111 lakh crore infrastructure pipeline being rolled out. So the expectation is there will be job employment growth because of the economy, and the government doesn't need to do much on the intervention side. But having said that, yes, there are huge swaths of our population which are facing this COVID situation, and yes, the government is doing, but you must also understand the government has a loincloth, and all of us expect it to have a three-piece suit. It's impossible. Mathematically, it's impossible that the government spend on poverty alleviation. It also gives you tax cuts. It also spends on infrastructure. It also reins in fiscal deficit. That's virtually an impossibility, mathematical impossibility. Given these things, the finance minister has done fairly well to balance between contrasting requirements.
Totally agree to your this one.
Hello.
Now, how do you suggest? I mean, apart from the kind of spend which you just mentioned, MRV, are there aspects which you believe that the government should look at to kind of bridge? I mean, or is it a support where rather than kind of depending on the government, we should look at surviving ourselves?
See, our biggest hit has come in tourism, travel, hotel, all these industries which were large amount of employment generator without much of formal education training. I have been under some sort of hit thanks to COVID. But the real solution for your employment problem is to go back to manufacturing. You may say digital, you may say India is looking at digital rupee, cryptocurrencies, all these things is one and fine. But if you want to solve manufacturing, you have to take the bull by the horns. And it's a long, convoluted process. I think Kamal Bali and I shared a dice yesterday. Am I correct, sir? We did share yesterday also.
Yeah.
And we did point out this is the biggest elephant in the room. It's the 800-pound gorilla, which nobody wants to touch, whether the state government, central government, because there is so much of vested interest in it that nobody wants to do it. And I would even suggest that if you use the single metrics of a budget, whether it's a success or not, if the share of manufacturing increases by 1 percentage point vis-a-vis the GDP next year, I will think that this budget is a success. But if you ask me, is this budget going to do? I suspect it won't.
Got that, sir. Yeah, so in terms of audience who are there with us in person, if anyone has a question for MRV, I would request them to raise it. So
I'm sorry, Mr. Bali, I ate into your time because I have another chamber to.
No, sure.
We'll just take one question for you.
Your connection also failed you, for which I should thank it.
Got that. So we'll take one question from the audience for you, MRV, and then maybe yes, you could kind of.
Sir, how you explain how this budget is helpful to MSME? Unless there is a proper connectivity, whatever the vision of the FM, I don't think so it will be easily successful budget. I don't know. You panelists should explain as educators these audience how it will be helpful.
Sir, for the finance minister, the prime minister, whether you are suffering from BP, cholesterol, sugar, all they have got only one medicine, Dolo 650. They say capital account spending will cure all your problems. That's all. Now they can't do much. They have put all their eggs in the capital account basket and they hope that this will cure your ills. Employment generation, fiscal deficit, your MSME or tiny industry, all these things, they think that only solution is I will spend, I will do what I can do. I can spend on capital. I will give largesse to the poor in terms of your Manregas and your 68,000 crore they allocated for Pradhan Mantri Kisan Yojana. So they are spending on these things and they are spending on PM Awas Yojana and all those other things. And they see that, look, I can do this much. I will not spread my eggs. I put it in the capital account basket and there will be a sort of a trickle down effect, which obviously the MSME should benefit theoretically. That is what is their solution.
I think
now, you may agree, you may not agree, but this is what they have decided.
Yeah, I think that could not have been answered better. I'm sure Kamal Bali also has something to add. So he raised his hand. Happy that you joined back.
Yeah, absolutely. I completely agree with you. I mean, with MRV, I think the trickle down effect, which is going to come through the infrastructure spends, there will be a lot of requirement for new jobs while infrastructure is being built. And I think this will create demand for more consumption, which will encourage the private investment to come in, and then there will be more consumption, and that will set off a virtuous cycle. I think so. That's on one end which will happen. So that's clearly on MSME. I think one of the things is basically to grow, to actually cure manufacturing of all its ills, because MSME is part predominantly of the manufacturing sector, and clearly the PLI scheme getting anchor industries into India, the large industries, and around that MSME ecosystem will get built. And I think there are number of schemes already started including Samarth scheme, where MSMEs can graduate to an industry 4.0. The problem is that too many things are happening at the same time. A lot of digitalization is happening for the MSME sector also, which the industry has to be ready to do that. And typically, I'll just take a minute more just to complete what I wanted to say. There is a framework built on how to take manufacturing to 25% of GDP. There are clearly three pillars. Number one is the domestic ecosystem. The second pillar is firm level competitiveness. And the third pillar is global ecosystem. So in the first pillar, in the domestic ecosystem, what is being done is things like ease of doing business, cost of doing business, speed of doing business, MSME, supply chain effectiveness, and governance related matters, which is basically pertaining to central and state government. The second is firm level competitiveness, where we have to talk about manufacturing technology, talent pool, quality, cost competitiveness, and things like that. So that's the second piece where companies and industry bodies have to work together to really take India and take the brand of the companies little higher. And the third piece, as I talked, is a global ecosystem, where the central government has to do the heavy lifting in terms of foreign trade agreements, market access opportunities, and building brand India. And that's very, very important. Today, when we look at a product, if it is very good, say brand, it's made in Germany, then you say, oh, it must be expensive, but it must be high quality. And the moment we say made in China, we believe, irrespective of this, without seeing the product, that it must be cheap, it must be low cost, but not great in quality. So immediately there is a brand association. So therefore, there is a huge opportunity for India to really make it value for money brand. There's a huge space between made in China and made in Germany, so to say, and made in India can really become a value brand. So manufacturing will have to base itself on these three very important pillars, and a lot of work can be done, is being done. And I think we need to have a collective and a collaborative approach where industry, academia, government, authorities, all of us have to collaborate. And that is going to be the real story. I completely agree with MR Venkatesh that manufacturing is a panacea for long-term growth, multiplier effect, also to services and to agriculture. And this, to my mind, and this is the most important, this is the most opportune moment when rebalancing of global value chain is happening, where $4 trillion of global manufacturing is going to move away from China. So, and I think this is the time where we can do, and PLI is the right thing which the government has done. And PLI, the initial response to PLI has been very, very effective. So friends, to my mind, it is manufacturing and more manufacturing to really take India out of its troubles.
Thank you, Mr. Kamal Bali. I think in terms of the focus, I'm sure the government has probably, with various schemes, laid the foundation. But manufacturing definitely is something which is like a phase. I'm sure the kind of gap we have with countries which we are wanting to compete, I'm sure it's a long way to go. But yes, focus has to be there. And that's the highlight which I think you have kind of clearly laid out. Now, just to kind of, on behalf of the panel, since MRV has a time constraint, we want to kind of sincerely thank his time. I think he despite being in Delhi, despite kind of having significant other commitments, he gave us time, shared his views and thoughts. I'm sure the audience here really values. We thank you for always being available to us and look forward to your continued support. Thank you so much, Mr. MRV.
Thank you. I'm logging off. Thank you, man. All the best.
Yeah. So
and incidentally, Mr. Bali, the way you raise your hands, you must be a panelist in Arnab's show. You are getting a chance to speak. So I would invite you there also.
Good.
Thank you. Thank you.
Yeah. Yeah. So let's move on. I think with 100 people in terms of raising their questions, I'm not sure the time constraint which we have, how to kind of give justice. But yeah, let's kind of look at prioritizing. Definitely, this budget has touched upon various aspects. It's kind of brought in, it's kind of brought in from a startup perspective, from an MSME perspective, brought in taxability on cryptos. So I think various aspects. So maybe let's kind of give justice. I mean, I'm sure the people who are listening to us needs to kind of get a flavor of all. Rather than repeating a particular question, I'd only urge the audience here to kind of let's touch upon different aspects, and I'll also do my justice in sharing the different kinds here, so that the people who are kind of listening to us get the best out of it. Yeah, we have one question here. Maybe I'll request. Yeah, please mention the name to whom you want to address and the question here.
My question is for the panelist, MPC Rao. The budget is, as far as my concern, it is completely flawed. The main issue, the present issue is more than 24 crore people are gone under poverty line due to two big COVID-19. The small businessmen and small employees also. They have lost their employment and small business has been closed. Particularly in one, to give an example, in metro city like Bangalore itself, more than 28,000 small shop and establishments are closed. The present vision of the budget is 20 years going forward or 10 years going forward. The poor people do not think about what is going to after 10 years. The present livelihood is in the crisis.
Yeah, so we'll ask the question.
Yeah, it is not touched anywhere.
What is the question which you have for the panelists?
Government has not touched anywhere to these people. One, then price hike regarding petroleum, diesel, bringing it to GST. That also not touched. The government has not talked anything about the price rise. Government has not touched even the price rise in the steel, considering the industry which is going.
Sir, if you have a question, I'm sorry to pause you.
So government has not touched any of the poor people or the needy people.
Understood.
That is the biggest flop in this budget.
Yeah.
Why it has done like that? At least they got a fear of the next election, all those things. Maybe that reason they have not given any spirit to the budget. Actually, it is which
we value
KCC also has to be given a representation on this matter.
Yeah.
That the government should come for the immediate help. Not just think after 15 years we are going to do, after 10 years we are going to joining the rivers. All those things are long-term requirement. The present requirement is not touched. So the entrepreneurs, the professionals like you must give a clear picture to the government that this type of budget is not needed at this point.
Sir. Yes. Sir, FM has been agreed to address all of our members. She also called for post-budget memorandum. All your issues can be sent to us. We'll take. Today, define is what is the fine print, what is exactly wants trade, service sectors and everything. If the limited, because Jain is from ABB is industrialist, PVC also from corporate and advisors and everything. Muralidhar is industries.
Okay.
My request is confined. What is that budget like Kumar sir asked? How it has got impact? You have seen Kamal Bali sir talk about 4 trillion economy. So let us not talk about this and that. Instead of that, what is that fine prints meant for us? Then 9th, Finance Minister is coming on 9th, sir. Please, sir. Yes. So,
What this audience wants, their opinion, their education. Let us educate us. What we ask is, let experts say something about that. That's what we are sitting in front of you.
Yeah, so we certainly value the feedback, sir. So I'm sure from a finance minister's perspective, a similar question was asked, and I'm sure the only feedback which she said is not all can happen only through budget. I think from a budget perspective, she is only a receipts and expenditure account, right? So she can only plan for the allocation, and there are ministries who are dedicated from an actions perspective. So Prime Minister has kind of, I'm sure the finance minister can only allocate in terms of the ask. Certainly, I think what you raised is a very valid. All of us echo the kind of impact which COVID has kind of brought in, the way in which it has pushed us in terms of many of us back is certainly known to us. But yeah, I think sometimes the feeling is always, there's always, I mean, expectations is always when we have a higher expectation, and when certain thing comes to us, it doesn't meet that, dissatisfaction is there. So we echo you. So maybe I think given the time constraint which we have. Yeah. So how much time do we have, Shravan? Yeah, wonderful. So that kind of gives us to kind of circulate the questions which have kind of come in. Certainly, I think this budget talk, has kind of brought about taxation on virtual digital asset, right? So I think PVS and MRV definitely kind of touched upon in their slides. I think from a taxability perspective, first is to kind of, the question asked by the audience here in terms of one is by the government bringing about a tax on virtual digital asset, has it in a manner legalized this particular, whether the crypto as a currency, whether it is now legalized. So I would probably request PVS to share his views and thoughts on whether by virtue of it being brought under taxation now, whether we are saying crypto is a legal currency or is it legal in terms of transacting in crypto?
I don't think tax laws can either legalize or remove the illegality with any transaction. There's a very old well-set principle that taxation of illegal income is always possible. Smuggling of income is taxable. There's no difficulty. Likewise, if crypto is taxable tomorrow, it doesn't mean that government is partaking in illegality. Government is taxing income. And that's the role of income tax as far as the income tax is concerned. It has prescribed a rate which is 30%. It brings certainty as to how the government will tax that particular transaction. Had it been illegal, then possibly it would have gone like a search kind of an income. That much has not come about so far because the illegality has to be dealt with under other laws. If FEMA and other things deal with it in more detail, possibly we'll get the illegality a little better. At this point, taxation laws deals with taxation of income. And all that the government says is the gross income minus the cost of acquisition of the asset. That's all will be allowed as a deduction. So any surround business expenditure, those things will not be allowed as a deduction here. This all is there. So I would say illegality or legality has not been dealt with in the taxation laws.
Mr. Deepak Kumar Jain, can I speak?
Yeah, please.
Yeah. Sir, I'm Vimal R. Kanter, Director of FKCCI since last more than 17, 18 years.
Yeah, you don't need an introduction,
Yeah,
sir. Come on.
It's okay, sir. Some new panelists are there,
Yeah.
so I should. Sir, mass job creation can be done not only by manufacturing and agriculture, it is also by trade. We are ignoring trade. And if the government come up with a policy for small businesses that they can employ 2 or 3 people without any labor hassles, without any labor registration also, I think 50 million jobs can be created in 1 year. That I had said even under Manrega, our Rajan, our former Reserve Bank governor, he said, you come up with urban Manrega. I said, there are no people to work. Everybody wants everything freebies. So the government should say if private small businesses can employ people at Manrega plus rates in urban as well as in rural areas, that will create 50 million jobs. And second point is accountability of government officials. Let it be from peon to the top man. That is most necessary. Otherwise, what happens, as our friend from ABB was saying, some assessment and all these things, I will say that they will assess and throw. They will say, you go for appeal, you go for tribunal, you go to High Court or Supreme Court. But once that appeal or anything is won by the assessee, the gentleman or the lady, whoever she or she, they should be downgraded. They should not be given any promotion. Dismissal and suspension should be the part of the government service, in the service. Then only the people will get ease of living, ease of doing business, and on the happiness index, we are very, very low, even compared to Pakistan. Our happiness index will go up. So I request all my panelists to stress upon one thing: accountability of everybody who are doing. They may be directly or indirectly employed by a government department, maybe a private sector, public sector.
No, we got you, sir.
Yeah,
So I think from a perspective, I think you have clearly laid out your thoughts. Maybe I think I just got a message that Mr. Muralidhar also has a commitment and he would want to kind of do. Maybe if we have any questions for Mr. Muralidhar, I would kind of request the audience to ask him, while there are certain questions which have also come to him directly. So I'll probably give the first opportunity to the audience here to raise a question. Yes, sir, please.
Anything for the
Muralidhar,
sir.
yeah, please, behind you. Now, can we have a question directly to Muralidhar, please?
Yes, sir.
Before we have a question to the other panelist.
So,
if you have a question for the Muralidhar, we can kind of ask.
yes, sir.
Yeah.
So the question simply is, we still touted as the fastest growing economy in the world, despite all the problems that we have. So can we get a perspective as to how the other countries are faring in these times? Where I know the problems are not isolated to India. So any comments on that, sir?
Mr. Muralidhar, was it the question clear to you?
Yeah, I can just answer.
I think you're on mute. Maybe after you give your response, I'll probably also request Jayanta to add on.
Okay.
Mr. Muralidhar, we are not able to hear you. You can unmute.
The World Bank.
We're still not able to hear you.
We are able to hear you? Hello?
We are not able to hear you, Mr. Muralidhar.
No, now we can hear.
I have unmuted.
Yeah.
I have unmuted. I
Yeah,
think
the
the
volume was low. Yeah.
Hello? Hello? Can you hear me?
Yeah, we can hear you now.
Yep. You know, the World Bank has keeps coming out with the growth numbers for all the economies and the world also. If you see that just about 2-3 months ago, the world economy was supposed to grow 5% plus. But now, recently they have come and they said that world economy will go only by 4.4%. This is the average of all the economies put together. In that, the prime movers are the EU economies, US and China. So most of the economies are going to grow at a much lower rate in the calendar year 2022. The main reason is the oil prices, the conflicts in many zones in the world. Like, at no time you have seen the world has so many zones of conflict, but today we have at least 4 or 5 places where it could become a serious conflict. So, and then the oil prices, the Fed talking about increasing the rates, and the pandemic. See, nobody knows about the pandemic. That is why the World Bank has lowered the total growth prospects, and all the countries in the world are growing at much lower than what they expected because of the lockdowns. So in that background, if you see that the Indian economy's growth has been spectacular, but only concern is that we are only looking at one portion, like Mr. Rao talked about, the rural poor and urban poor are not being considered. Only the other parts of the economy are getting a boost. So that could also lead to some kinds of problems. This is my strong feeling.
Wonderful. So I'll probably request Jayanta to also add on, because I think he mentioned that he's probably, in terms of his assessment, we are probably on the right, in terms of the way in which the situation is, we are probably privileged to kind of be part of this growing or the shining economy.
Yeah, so what I told, just continuing from what I told earlier, that, I think also in the budget speech also it is there that we should focus for exports. So we have all the abilities, and if we can, I think what Mr. Bali also told, that if manufacturing is the key thing. We are I think 2/3 of the revenue is coming from services. Whereas if you can focus on manufacturing, and manufactured goods from India is also accepted by many of the countries now. There were issues earlier, many even Middle East countries were having a different parameter for Indian manufactured goods, but now that is gone over the years. So if we can focus on manufacturing, I think, and if we can bring our increase our exports very fast in the quickest period of time, I think we can get this vacuum which has been done because of China getting, because China, is very difficult to say, I don't take a Chinese manufactured goods, because they are there for last maybe 20 years now. Yeah. So, yeah.
Certainly. Thank you, Jayanta.
Yeah, one second.
Yeah. Just one moment, sir. There's another question for Muralidhar, which has kind of come in largely with respect to how startups have kind of performed. The economic survey mentions that this is a question to Mr. Muralidhar. The economic survey mentions that there are 83 startup unicorns with a total valuation of over 270 billion. Now, how do you see the extension of time limit, which has been kind of provided in the statute, to have startups be incorporated actually benefit new startups to kind of come in? And how would it go a step forward to have further such unicorns? What is your views and thoughts, sir?
No, this is an excellent initiative by the Finance Ministry. You know, there is another study I would like to bring in is that for every 20 startups to 25 startups, only one startup is able to be there after 1 year. Well, forget about becoming a unicorn. The survival of the startups itself is so difficult. So anything that the government does to do any hand-holding to the startups is a very, very welcome move. And becoming a unicorn and generating wealth is the most welcoming thing. And I really appreciate Nirmala Sitharaman for having thought through these issues for the startups and doing hand-holding them. I think it's an excellent move, and this is only going to support many more startups which are in the pipeline, and they will survive. And we will see that many more unicorns are going to hit the arena in the next 1 or 2 years.
Much. You have a question for Muralidhar, is it? Yeah. So I think how much time do you have, Mr. Muralidhar? Would you?
I'll take this question. Last question.
No. You stay back. He wants actually Jain to answer.
He wants. Yeah. Okay. Maybe the question is for Jayanta, and then probably we'll have a question for Muralidhar.
Yeah. Good evening. Okay. About especially manufacturing. Just now, the Kamal Bali and also Ms. Venkatesh touched upon manufacturing about the $4 trillion investment or okay, technology has to come down to India. Yeah, okay, may take in India. Okay, now why this thing is now manufacturing is the main this thing, especially large industries or MSMEs. Now, when you come to the manufacturing, will this budget really boost the manufacturing industries? That is my main question, because already 2022 started. January, almost 30 to 40% down in so many industries already. Especially hydraulics and even automobile, all these things. So my question is, will this budget boost the manufacturing industries? Or one more thing is, suppose people are ready to invest and people are ready to take the technologies, and only the institution or bank or institution should make more progressive and also liberal to give the investments also or loans also. So suppose already 1 month over, even this month already projection in the sense manufacturing industry, even MSME is low only compared to what December or November. Yeah. Okay. Will this budget boost the manufacturing? Yeah. And will
short question we understood, sir. Yeah. The question is whether this budget has something for manufacturing. So while I'll request Jayanta to answer first, maybe I'll also request Kamal Bali to be available to kind of answer and add to the perspective here. Yeah. Yes, sir. Yes, sir, Jayanta.
Yeah. So if you see the budget, there is a focus on ease of doing business. Okay. Which is ease of doing business too, they are saying. And also there is focus of supportive policies on the R&D. So R&D, if you see today, it is all about artificial intelligence and, geopatrical systems, drone, semiconductors. These are very new things, which I think semiconductors is one of the key things which can be a game changer. And I think government is now promoting to, spend on that. This policy which is coming, it will help us to do it. But, the turnaround time, if it is say less than 1 year, I don't know whether it will be there. But if we start today, maybe in 2 years, 3 years time, we can achieve what we targeting today. So it is there. So may not be everything, but one point which I think what you told, I also agree, that the departments, the government, because it is not implemented everything by the state, the center. So state government also has to be geared up. They should be ready for the challenge which the government, central government or the country wants. So I think if I see the Modi economics, it's like, they want to run 100-meter race, whereas we don't walk every day. So it is everybody of us, including me, you, and everybody in the room and the whole country has to do that practice. If somebody makes a policy and the other person derails it, nothing can happen to us. But I think, as I told earlier, we are the best of time. We have all the resource, technology we don't have. We have to invest on technology. So we take the technology from the European countries or the American countries, So we have to pay royalty. So that becomes a cost to us. But even if you take, we increase our manufacturing, and government, the state government gives us those land and those labor law simplification, which the central government also has moved it. If it is implemented, I think we can do it. There is nothing that can stop us.
Dip in what context, sir?
Dip in orders as well as
GST revenues don't talk about that way.
yeah, November, December, October, it was very good.
True.
Supreme. Now January, February is almost 30-40%.
Yeah, true. So I think the situation is such where definitely the business has become so unpredictable. But yeah, I think the positive side which Jayanta desires to highlight is, yes, we have all the resources. So it is for us to kind of see how we can kind of supplement it and make the best use of it. Do you want to add PVS on this? Yeah.
The government will do certain things. We have to acknowledge what are the positive things the government has done. The response may take a little while. We do not know. The government reduced the tax rates for manufacturing to 15%, hoping that new manufacturing, the entrepreneurs will put more money and come into the manufacturing. While the policy is wonderful, the framing of the law suffers a little because it allows backward integration. It does not allow forward integration. Too many restrictions have come into the clause. The formulation of the thought, the policy, and the supporting enactment which comes, that's a gap, if I have to say. We must bring these kind of gaps to the attention of the finance minister. Customs duty reforms which have come, it's a response to increase the local manufacturing to the extent possible. It's a policy statement. Whether it will actually happen because China is any other country which is from where we are importing, they are far more competitive in these goods. You may not be able to shift the needle. But assuming that even some portion of it gets manufactured because of this, we will be able to do. One point which I would allow another person from the audience, sir only raised it, whether we are given a fillip to small traders. That is not visible. I don't know whether it can come as a policy of the union budget. Certainly state budgets can look at it, because today I do not know whether the traders will survive this onslaught for a lot of time. There is a declining. 25% is what people are saying is that declining the local trades. And with e-commerce coming in, whether the trade itself will get wiped out, I do not know. So we must be a little careful on that. That is the area of our, now it is a session today. One, we can be critical of the budget. Number two, we can use it as an opportunity to raise it with the finance minister that you have done this. Can you do a little more here? And this more can augment these kind of rewards for us. This kind of thinking we should generate, because the government has thought a single bullet. So I will spend capital, the trickle-down effect will happen. It is possibly the government has felt the fruits of it in the past. It's not that the past capital expenditure was nothing. Last year it was very good. It's about 5.5 lakh crores they have spent. The government feels that 7.5 lakhs, 7 lakhs I'll spend. It will take care of the rural poor. It will take care of the agriculture, the labor, take care of the labor class. What it will not take care of is the traders and the labor associated with the trade. We must possibly bring that to the attention.
Yeah, that's good.
I think rightly said. So maybe should I also invite Kamal Bani for his thoughts here?
Kamal Bali is there? I think it's locked. Yeah. Sampath Raman sir has question.
Yeah, so should we just acknowledge Muralidhar here? I think he wanted to kind of. So before Mr. Sampath Raman asks his question, Mr. Muralidhar, are you there still? Yeah, so maybe I think, yeah. So I'll request Mr. Sampath Raman to raise his question.
Yeah. Good evening. I agree with most of the speakers that this budget is an excellent budget. As a nation, it projects us excellently. But I have two questions. One, on the MSMEs front, my feeling is government has not done anything. And one question on that is that, you see, this 5 lakh crores of ECLGS, is it a cash outflow for the government? Is only a guarantee. Then they are projecting it as though the government has given 5 lakh crores. Am I right? This is one question. Second, there are a lot of cases of refund which we are getting stuck up with. It's all, many of them are on, based on policy matters to be reviewed. The government now says, our Honorable Finance Minister now says, if the matter is already under study, you should not file any case further. It will take its own course and will give you the decision. Is that correct? How long will they take to give the decision? Is there any time limit? I would request the panelists to enlighten me on these two questions.
Yeah. So on the first one, I'll request PVS to kind of share his views here.
Second one is easier for me to answer than the first one. That falls into my domain. The first one, I will leave it to economists to answer.
Yeah.
Sir, 2 or 3 signals we must pick it up as to what is the influence of the policymakers at the ministry level on the bureaucracy. You would have seen about 3-4 years, 5 years back, there was a persuasion by the local tax office to pay more advance tax. Last 2 years, we have not seen any persuasion from any official to pay more advance tax on any company which has been paying advance tax. So I will say that the finance ministry is very clear. We don't want you to pay any tax which you are not liable to pay. What the government is looking for is that you pay your taxes which you are liable to pay. Now, coming to the refunds, I do not think the finance minister would say, please do not grant refunds. I do not think, because they have enough tools to say that. Today, they have enabled the provision in the ITC that they can restrict the amount of ITC which you can avail. So the tools are there with the government at a policy level to restrict any kind of utilization when they want. This refund is a bureaucratic mindset. We have got a 19th century bureaucracy and a 21st century vision. These are not matching. Somewhere, if they are made to match, who is responsible? I have no problem. Finance minister is responsible for the bureaucracy also. But the translation is not happening today. We must enable the finance minister. TP Gram, you file one complaint, it gets resolved. At least 90%, 60, 70% of the cases get resolved. There's a tool which has been given that I have applied for this, I'm not getting the money, please help me. There is a help which is coming out. So I would possibly think that the administrative difficulties of the tax department in granting refunds may not lie with the finance minister, or she doesn't have knowledge of the kind of pendency which is there. Possibly a little amount of education on that without being complaining. After all, we don't want to complain and get to more problems with the kind of institutions we are dealing with, I would say. But certainly your experience is valid. You are speaking out of experience. Nobody speaks without, not with your experience alone. You have got a wider experience together. You are a public figure and you are not speaking for yourself. You are speaking for a larger population. Certainly we can try and see whether we can tell the government that the refund should be faster, it should be time bound, there should be accountability for not granting a refund. Beyond the interest which you may be given, something more should also come. We can certainly talk about it.
Sir, it's an issue where they have denied refund of input credit, surplus input credit on services arbitrarily, and Supreme Court has ruled that since they have made a rule preventing grant of refund, we don't want to interfere, but there is a clear case for you to demand it. Let the government take note of it, just the GST Council take note of it and do it. They have directed already 6 months or 8 months over. These people are just keeping quiet. Now they say, don't go to the court again.
What you have raised is a very valid point. So I'm sure many such examples and concerns can be definitely raised. But I think the valid point is there's always something which is good, something which is bad. Somewhere we'll have to kind of digest, and where we cannot, the question is, how do I kind of report it? So do we have a reporting matrix where I can escalate it is the question which Mr. Sitaraman is wanting to kind of escalate. So despite all the judiciary, despite all this, where do I kind of go when the person who's wanting to give me does not desire to kind of give me? So I think that's the situation on hand. Maybe I'll request Is Prasad to kind of add.
Before vote of thanks, I just want some. I take this opportunity. It's really good that we have been receiving a lot of suggestions and also anomalies and also the need to bring something more reforms. very happy that when I've written and also been talked to Finance Minister office, yesterday she has called from the Finance Minister office, his secretaries, and agreed on 9th, that is not more than like within this span of 9 days, she would like to address all the members of FKCCI and understand what more she can make reforms. I think this is the one of the best by inviting all the panelists and experts, understand we are open. I think on the day of program, we'll not have any interactive sessions. My request is please send complete information. We'll take up every information before you and send information to her, and she will cover up 40 minutes. Maybe she may take from the industrial sectors like real estate, industry, manufacturing, and everything, one question. And we're really very fortunate that FM being from Karnataka has agreed to address on 9th virtual. Timings will be known to you. And really the experts, I can say that I think after a long time, we have our PV Srinivas, the Azim Premji Foundation, 1,75,000 crores, corporate advisor, and Jain from ABB, and Kamil Bali is from Volvo, MD and everything, and our own Muralidhar, who has been research scholar and everything. And again, Deepak Kumar Jain is indirect tax experts, and our dynamic chairman, Shravan. So over to my Ramesh Chandra Hoti for proposing vote of thanks.
So let me also
Thank
acknowledge, sir, before the vote of thanks comes in. So for me, and I mean, in terms of our firm, Accurate Advisors Private Limited, definitely it was a wonderful opportunity to join hands with FKCs here for this. And in terms of the panel, for me, it was sincere a privilege to kind of share the dais with PVS, Jayanta, Kamal Bali, Muralidhar, MRV, and definitely the kind of questions which we kind of got in. Evidence is that yes, from the participation, both virtually and physically, despite the kind of thing, I'm sure each of you have kind of raised your questions. We would have kind of done our best to kind of share and address them, but definitely there'll always be something which is not addressed. So I will invite, if there are any questions which still remain unanswered, I would invite you to kind of share that to FKCCI. We will try and kind of compile it and kind of address it. So from the panel here, we thank the audience, and I'm sure each of the panelists from my side for taking out time and addressing the queries here. Thank you so much from my side.
Good evening to all the FKCCI members and managing committee members, past presidents, and a good initiative taken by FKCCI led by my president, Dr. C.I.S. Prasad, for this analysis of the budget of 2022-23. And you are aware, when you play cricket, that's how the finance minister has bowled a googly, or you can call a Chinaman. Now it is up to the experts how to read for the industry and trade friends to play the proposed amendments and the budget to analyze. Today we had a distinguished, esteemed panelists and good speakers who have made the budget to in integrity, nits and bits of the present budget. I thank at the outset Shri C.A. Deepak Kumar Jain, who are the sponsors for this today's evening program. I thank you on behalf of the FKCCI members and present here. And we also thank the virtual, more than 200 participants were there, and also about 100 more here present. I thank one and all who have all this evening who have made this presence and this budget very successful. I thank you one and all for you also. And outside, I thank Mr. Senior, Mr. P.V. Srinivasanji and Mr. Jayanta Chatterjee and my office bearers and the panelists who are there, past president Dr. Muralidharji, Mr. Kamal Bali and Mr. M.R. Venkateshji. And at the outset, I would have been our young dynamic chairman, Taxation Committee, Mr. Shravan Gudutur. I thank one and all and have a good day, good evening. Thank you. Thank you. Yeah, please look forward to our dates of FKCCI mega program with the Honorable Finance Minister. We will be addressing you live. Please do attend that program also. Thank you.